Assalamu alaikum.
Alaikum salam.
Alaikum salam.
To give another couple of minutes before we start. Brother Umar, we can't hear you.
Brother Rizwan, can you hear me? Assalamu alaikum.
Walaikum salam. Yes, I can now. Yes.
Brother Rizwan, can you hear me?
Yes, yes, we can hear you. Can you hear us? What are you? We can hear you. Brother Umar, can you hear us? We can't hear you, Brother Umar, you're muted. Assalamu alaikum wa rahmatullah, everyone. We will be starting shortly. Brother Umar, can you hear us? Is there a Technical glitch? Can you hear us? Brother Umar, are
Yes,
you
sir.
audible? Okay.
Yeah. Okay.
Okay. So should we start then, inshallah?
Sure. Please. Bismillah.
Okay. Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala ashrafil anbiya'i wal mursaleen. Nabiyyina Muhammadin wa ala alihi wa sahbihi ajma'in. Distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuhu. And a very good day to all of you joining us from wherever you are. Alhamdulillah, this is our first AAOIFI public hearing for the year 2022. Of course, this is a regular exercise that we undertake as part of our standard development process. This particular public hearing is related to two important AAOIFI governance standards. Those are Islamic crowdfunding and syndicated financing. At the start of the year, AAOIFI issued five exposure drafts, two related to AAOIFI governance, two issued by AAOIFI Governance and Ethics Board, and three by AAOIFI Accounting Board. These five exposure drafts are available on AAOIFI website for public consultation to share your feedback and comments. And throughout the forthcoming months and weeks, we shall be organizing a number of public hearings on these five exposure drafts related to the two boards. For every standard, we tend to organize more than 4 public hearings, looking at different geographical locations, making sure different stakeholders are tapped in, and we benefit from the experience and knowledge of different stakeholders from different parts of the world. The idea is to make sure that we receive as much feedback as we possibly can through these public hearing sessions, as well as through our public consultation stage in general, before the standards are finalized. So a very important note for us to start with, this is a very important exercise as part of our overall standards development process. So the standards development process at AAOIFI is very comprehensive. A brief summary is presented in front of you. As you'll see, it starts from identification of a project. I'll not go into detail in the interest of time, but the orange box that is highlighted, so the standard, once we initiate a standard, it goes through a different stages of standards development for it to reach a document which we call exposure draft. And this exposure draft is presented at events like this today, where we receive a lot of stakeholders from different markets, from different institutions, both regulatory side as well as practice and academia, for us to receive some feedback and comments. So today's event is first public hearing on these two important standards on AAOIFI governance standards issued by AAOIFI Governance and Ethics Board. So here, our job in general is to present to you the exposure draft on the standards. We will take you through the details of the standard in short while. This is particularly our job, and in general, your job is to share your feedback, your knowledge, your experience on the standards. And I believe you've already read through the documents that have already been shared with you. If not, they are available in your emails through the Zoom link as well as on AAOIFI website. So the exposure draft will be presented in the form of PowerPoint presentation, but it is exactly same as the exposure drafts. So in this regard, We would appreciate your feedback and comments on the document. We don't tend to share any PowerPoint presentation because it is exactly same as the exposure draft itself, which has already been shared. So we would really appreciate your feedback in any shape and form, be it in that you think that certain area has not been covered appropriately, or certain things have not been explained well, or there is a duplication of wordings in some cases, or even at the minimum, if there are some grammatical errors. So we would really appreciate your feedback and comments through today, as well as even post this event. If you would like to share your feedback and comments, we really appreciate if you share it with your colleagues as well, so that we can benefit from the experience and knowledge. This is the time where we receive feedback, and this is the time where we involve you in the standards development process at AAOIFI, which is itself is a very comprehensive exercise. It takes us about 2 years to finalize a standard. So we would really appreciate your feedback. Once we receive these feedback, we present these feedback and comments to the relevant working groups, as well as to the board for their consideration and possible incorporation within the final standard. So we regard this stage very important, and we really appreciate your help and assistance in making sure that when we finalize the document, it's comprehensive and accurate, as well as covers different areas of on the topic. So with that, let me hand it over. As I said, our job is very easy. We would present to you the exposure draft. Your job is to share your feedback and comments either through this chat window at the bottom, question and answers tab at the bottom of the screen. Please feel free to ask questions, seek clarifications where necessary. Even if you have some comments and feedback post this event, please feel free to share with us. We've got an email address there. Please share with us on governance@aofi.com, as these standards are related to AAOIFI Governance and Ethics Board. Inshallah, this will be mutually beneficial for us as well as for yourselves and for the industry in general. So without any further ado, let me hand it over to Mr. Umar Mustafa Ansari, the Secretary General of AAOIFI, to present to you the two standards.
Thank you, Brother Dr. Rizwan. A'udhu billahi minash shaitanir rajim. Bismillahir rahmanir rahim. Bishrah li sadri wa yassir li amri wa hlul uqdatam min lisani yafqahu qawli. Ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuhu. And good day to all of you from different parts of the world. We know that you are joining. And to be honest, it's always a great pleasure to see very learned names, some good friends in the list of participants. Welcome you all. Brother Dr. Rizwan has already touched upon the importance of conducting these public hearings in the process of development of our standards. I do not want to emphasize more on it. Only one thing I would like to say that it is best that the session that we are having is maximum interactive. Means that interaction we can allow you by voice as well. Some of you may raise your comments and questions by voice as well, but I would advise you always to use the Q&A tab. At times there are some questions in the chat window. At times it's not very much helpful. I feel that at times we are missing out some of the questions because some of the friends put them on the chat window. So one very important thing, put the questions in question and answer tab. Secondly, if you want to raise a comment or mention something by yourself with regard to the standard, make a comment, raise some question, please feel free to raise your hand. We'll try to accommodate maximum as possible. This is an interactive exercise. It should not be considered like a sort of training session or something like that. So with that, I would like to come to today's topics. So the first topic that we are going to discuss today is our exposure draft on Islamic crowdfunding. there is something, there are a few things unique, not one something. I would say there are a few things unique about this standard. The first thing is that it is first of AAOIFI's fintech standards. That the first time that AAOIFI has come out to cater to the challenges of the new era of fintech. And we believe that Islamic crowdfunding, although at this point of time is very small in numbers and very much less present in terms of geographical presentation and presentation in different jurisdictions, but with regard to the potential, probably it has one of the greatest potentials to change the way, I won't say banking is done, I would say Islamic banking is done. Because for so many reasons and for so many purposes, Islamic crowdfunding has the potential of changing the way the business is done. It is happening in the conventional side, it is happening on the social front, but from the perspective of Islamic finance, the potential that it brings is great. Now, there are various reasons for that great potential. We have been discussing this thing in our governance and ethics board, because if you see that in terms of size of transactions and in terms of significance to the present market, there were so many different other topics that might be necessary to be taken at the first stage by AAOIFI governance and ethics board. But this is a comparatively smaller segment, a niche market, but we took it on a priority basis because we believe that it has a great potential. And we want that this potential should be exploited and utilized in the greater benefit of Islamic finance. And not only Islamic finance, we would say that even for the Islamic economic system. A lot of things that seem to be impossible in Islamic banking become possible if you try those ideas on crowdfunding. Technology is already changing everything. The way technology moves, it will eventually affect the way banking is done. But this is an opportunity to start from now a journey that can take Islamic banking and finance to the real next level, where there can be better transactions, the real Sharia compliant intermediation in form of real transactions, more economic substance in the transactions, avoidance of a lot of what we call controversial transactions, which are permissible, but again, we know that they have issues in compliance and they have issues in implementation. So considering these things, we believe that this standard provides a great potential. It will provide a great potential. And we hope that going forward, it can change the way things are done. And even it has the potential of changing the mindset of professionals related to Islamic finance. With that, I would like to take you to the standard directly. There are a lot of things about this standard. This is a very detailed standard. There were so many, even the regulations on crowdfunding are not available in the markets. Islamic crowdfunding altogether is a new concept for regulators. And again, considering the aspects not only of the commercial crowdfunding, but also of the social crowdfunding and a hybrid model, these all were in our mind when we were considering different options. Last thing before I go take you to the standard, I would like to thank our brothers from Athis Ventures, who is an Islamic crowdfunding platform. They have actually provided us a lot of background working, lot of background research and support for development of this standard. I would like to thank their team, Brother Umar Munshi and Brother Yusuf Sultan in particular, who have made this very difficult job for us easier. because otherwise we at AAOIFI believe that we would not have been able to develop a standard of this quality till the time we were not provided that sort of support and guidance with regard to as to how it actually works and how it should work. So with that, I would like to share my screen now and take you forward to the standard. I hope my screen is shared now and all of you can see it.
It's coming through.
Thank you, brother. No, I think I hope now you can see the right, the correct standard that we need to show first.
Yes.
Before we start, actually, we already received a question here. There is a question from Brother Berembach. Assalamu alaikum. Is there a recommended crowdfunding platform in Saudi Arabia or a good platform to be used from here? Brother, to be honest, as standard setters, we are not here to recommend others. I just mentioned about Athens because thanks to them, they actually helped us in developing the standard. I believe that Saudi Arabia has some very good new fintech platforms. One of them is like, you know, a sort of virtual sukuk fintech, which is like crowdfunding, but even a more structured version of crowdfunding. I believe they have started some of the crowdfunding platforms. My apologies that I cannot recognize all the names, although I was like, you know, I was inspired by some of the presentation that I was able to see from some of them. To be honest, there are some very good opportunities and on fintech side in Saudi Arabia. We were able to see some of them. However, one thing I would like to mention that while the initiatives were excellent, I was a bit concerned that some of those platforms started with the same controversial products as Islamic banking is doing. Particularly, I'm talking about Tawarruq. So the point is that even if you come up with an excellent new idea, but you start having the same old products, so the only difference is facilitation. It doesn't change the business model. It doesn't change the overall idea of doing business. So it's not about, you know, it's not about disrespecting anybody's business ideas. It's about coming out of the box, changing the way things are done. Because if I start doing more or less similar products on a technology-based platform, maybe it might be a bit more facilitative for some of the market segments, but nothing more than that. It may not change anything. We believe that Islamic crowdfunding, the real thing, has the potential of changing a lot of things. And we hope that the way Saudi fintech market is growing, we hope that a lot of good opportunities will be coming from there, inshallah. And we look forward to that. With that,
as well.
Brother Rizwan, is there a comment?
There is a hand raised.
Okay, so we can take that, brother.
Muhammadullah. Brother Muhammadullah, you want to say something? I think we can continue.
Okay. Okay, thank you, brother. So with that, let me take you to the standard. Now, preface and introduction section, I'm not going to discuss all because some of the points I have already mentioned. Just to mention one more thing, AOIFI Governance and Ethics Board is going to develop a series of standards on fintech. As I mentioned, it's the first one. We are picking up the next one as smart contracts, and the third one will be digital banking. Maybe with open banking and some other topics will be coming up as well. For now, because of Sharia issues, we have put cryptocurrencies on hold because we believe there are Sharia issues. We don't want to get into that or legitimize that because of Sharia issues. So for the time being, crypto is on hold. But other than that, we have already developed exposure draft for this one, and smart contracts, which is a very important one, it will be coming next, inshallah. And the third one we believe will be digital banking. A lot of other activities, inshallah, on fintech front will also be there. And there is a larger working group which will be comprising of smaller working groups working on individual standards. So maybe in the next few years we'll be coming up with multiple standards at the same time. So if anybody has any comments on PR and IN section, that we can take. Otherwise, whatever is a brief about the standard, I've already provided. So if any comment is there, we can take. Otherwise, we start with the body text of the standard, that is objectives of the standard. The objective of this standard is to set out a comprehensive framework for governance of Islamic crowdfunding. It is expected that the implementation of good governance practices for Islamic crowdfunding through the adoption of this standard, in turn, would help the industry achieve the following objectives: enhance public confidence in the Islamic crowdfunding sector and resultantly sustainability and growth of the sector, and assist economic development through the promotion of entrepreneurship, greater availability of Sharia compliant investments at retail level, and development of social finance sector. So we believe that we are talking about three very important aspects here: entrepreneurship, Sharia compliant investments at retail level availability means that more financial inclusion, and development of social finance sector means that the potential of crowdfunding to be used with social finance, including social microfinance and and as well as the charitable part. Scope of the standard: the standard shall be applicable to all type of Islamic crowdfunding initiatives and shall, to the extent as defined in the standard, shall be applicable on the respective elements of Islamic crowdfunding. The requirements of the standard shall be applicable at the level of each ICF issuance unless otherwise stated. The standard shall be applicable to ICF issuances and the respective elements of Islamic crowdfunding in addition to and not in replacement of the respective jurisdictions' regulatory requirements. For a lot of people among you, I can well understand, like me, to be honest, just 1 year back, it was a completely new subject for me. It's a new subject for anybody in the world. So we need to understand how crowdfunding works. So for that, there is actually not one party. There are multiple parties. Most important of those parties, the most important of those two parties are: number one, issuer that actually gets the money, or rather we should say number one is the operator, the one that actually runs the crowdfunding platform, which is like an Islamic financial institution, functioning as an intermediary, but a pass-through intermediary rather than a direct intermediary. Like the banking system works as a direct intermediary in which both side transactions are not exactly the same. It's not only pass-through, except for some Islamic finance transaction where there is a pass-through concept. Otherwise, the bank has depositors on one side and the customers or the financees at the other end. Here, the concept is connecting the investors with investees, the financiers with financiers directly by use of the platform. That is crowdfunding in the nutshell. That you approach the masses through media, through social media and electronic means, and you get their money in form of a fund generated through the crowd, and that fund is used to to provide financing, investment, or to provide charitable contributions to those in need of funds, either on a commercial or on a charitable basis. So the idea of this standard, as you will understand going forward, is to cover the whole Islamic crowdfunding issuance process, rather than only covering the operator or maybe issuer. Reason being that even if you cover the operator, for example, like for example, if you need to make sure that your investments, financing, everything is Sharia compliant, you can have the audit of the Islamic bank done. Once the audit of Islamic bank is done based on the Sharia audit, internal, external, all the process is done on the banking, it means that more or less you can remain you may remain confident about the operations of the bank. But here it's the pass-through approach. Here it's the connection approach. Here the operator doesn't become a financial institution for most purposes itself. Rather, it just connects the investors with the investee. So it means that even if you apply the governance processes, even if you apply Sharia audit, even if you appoint a Sharia board for the operator, it does not necessarily means that in all situations the transactions will remain Sharia compliant and good governance practices will be followed, because a lot of things are actually out of control for the operator. So some things are in the hand of the issuer, some of the things are coming from the investors, and a lot of things are actually dependent on the transaction structure and how the transaction structure is actually implemented. I can see a question, QA question answer in the QA tab. Is these standards applicable in any country? Brother Muhammad Ali Malik. Brother Malik, this is actually an exposure draft. As soon as exposure draft is issued, it will be like part of regime for some of the countries who adopt AAOIFI's governance at standards. May I request Brother Rizwan or somebody to provide a link to AAOIFI footprint report to our brother and all others in the QA tab as well as in the chat window. So those who are interested in seeing in which countries AAOIFI's standards are adopted and what is the level of adoption for different jurisdictions with regard to types of the standards issued by AAOIFI, they can be seen. However, as of now, this is an exposure draft, so it is not applicable anywhere. Once it goes through the public comments, like today's public hearing and other public comments that we receive in writing, only then it will be done. I would request any of the team members to just provide a response, like a link to the footprint report. With that, we move ahead. Do we have any other comment on this scope or the comments that I made? Okay, so coming to the definitions. Audit and Governance Committee in the specific context of the standard is the committee constituted in line with the requirements of paragraph 60 to 62. When we go there, we will see it. Commercial Islamic crowdfunding is the Islamic crowdfunding whereby the underlying operations are of commercial nature and the ICF issuance carries a return to the investors. This has been a big issue for us to decide as to whether we want this standard to be based on commercial crowdfunding or social, or do we need two separate standards? And after long discussions at working group and board level, we decided that we will be keeping we'll keeping one standard, but two different types. And actually there are open-ended and the close-ended as well. So there are some governance requirements which become different for commercial versus social, and which become open-ended and continuing versus the one-time transactions. Crowdfunding. Now, this is an important definition with explanation. Crowdfunding is the raising of funds for specific underlying operations, a campaign and a project or platform that pools a group of investors to provide funds on a commercial or non-commercial social basis. Explanation. Crowdfunding is the practice of funding a project or venture by raising money, typically but not necessarily small amounts, from a large number of people, leveraging on financial technologies and hence eliminating the traditional financial intermediaries from the process. The funding can be in the form of commercial funds. The funding can be in the form of commercial funds, such as lending with returns and investment on participation basis, or in the form of non-commercial funds, such as interest-free loans and charitable donations. Crowdfunding is a form of alternative financing and investment, which makes use of easy accessibility of connected networks of people through social media and online communities to bring investors and projects together. Elements of Islamic crowdfunding, we'll go to paragraph 11, we'll see that. External Sharia audit, the definition is more or less same in line with our standard number 6. Fatwa is a definition coming from our earlier standards. However, the explanation is important. In the specific context of this standard refers to fatwa issued by Sharia Supervisory Board on ICF issuance in line with the requirements of the standard. Internal controls definition is also coming from our earlier governance standards. Unless anybody has a comment, I don't want to go into details for that. Investors. Include the investors, fund providers, donors, etc., who provide. Now, this is very important. The term investor includes donors because the social crowdfunding is included. We have considered different terms like fund providers, investors, and donors may not be applicable on the commercial, but investors and fund providers were considered as the term. There were view that fund providers include investors and donors, and there was another view that investors include donors because the investment includes the social purpose investment as well, the social investment, so that donations or charitable work is also a social type of investment. So this is one of the areas where maybe you can provide your comment as to whether you feel that you are happy with the term investors or a term fund provider or any other term might be more suitable. But we need to keep in mind that the standard covers both commercial and social crowdfunding. So, we need to find a term that is more acceptable at both ends. So the investors include the investors, fund providers, donors, etc., who provide funds through the crowdfunding platform for the purpose of ICF issuance, including those who intend to earn returns through such investments, as well as who intend to add value through impact investments, that is, intend to achieve certain social objectives. Islamic crowdfunding. Islamic crowdfunding is crowdfunding that adheres to Sharia principles and rules in all its financial arrangements, contracts, and transactions. So it's crowdfunding, the same definition of crowdfunding we have gone through earlier, but it is about that if crowdfunding adheres to Sharia principles and rules in all financial contracts, financial arrangements, contracts, and transactions, it becomes Sharia Islamic crowdfunding. Again, it may include the social as well as the commercial element. Now I can see there are a few questions. Is this crowdfunding quite similar in concept with retail sukuk, and what's the major difference? A good question. Actually, a retail sukuk is more structured and regulated activity, but technically, yes, it can be quite similar. However, there are different situations. For example, sukuk is always an ongoing transaction. It takes time, while crowdfunding can be one-time transaction. For example, there is a building being like on the social front. For example, there is a masjid building going on. So you can create an Islamic crowdfunding issuance for which you get the money and the masjid building is constructed. So this is One example where the social crowdfunding is done. Then the commercial crowdfunding, for example, there is a small company. That company wants to raise equity. So you can do a crowdfunding campaign. Normally it is called issue or issuance or campaign. So you can do a small crowdfunding campaign. And in that campaign, as a result of that campaign, the share capital of the small company, the private company or the public company, whatever is there, it is issued. So which means that it's concluded. Once it is done, it's concluded. But an open-ended crowdfunding platform like crowdfunding issuance, for example, there can be a leasing of a truck to a small business. Now you want to lease a truck to a small business by way of crowdfunding. So this may be a 5-year transaction, like a continuing transaction for 5 years. In this situation, it will be exactly like a sukuk, like a retail sukuk. But the main difference still would be that retail sukuk will be subject to so many additional requirements. Like, for example, normally for sukuk, there is a SPV, there is proper ring fencing and everything. For Islamic crowdfunding, that still might not be necessary, because still Islamic crowdfunding will be a comparatively how would we say that this Islamic crowdfunding would be like less complex, less regulated. As of now, it's nearly zero regulated. But we are trying to bring in some good standards that even with lesser regulation, it can work with good governance and Sharia compliance practices. So the answer is social crowdfunding is not like sukuk. Commercial crowdfunding, if it is a term transaction or for a period transaction or an open-ended transaction, it has a lot of similarity with a sukuk, but it has less complex structure as a sukuk, particularly retail sukuk. However, some Islamic crowdfunding transactions may be exactly like a sukuk, except for being less complex with regard to documentation, with regard to ring fencing, with regard to having an SPV, etc. I hope this answer is sufficient for you. The next question is, I will advise we define donors separately from investors. That would provide a better clarification. Brother Muttalib and Ifause. Thank you very much, brother. We take again any comments that you make, inshallah, we will take them to the working group and to the board. So your comment is well noted. We have considered this thing, brother. In a nutshell, I can tell you that maybe the board might be interested in finding a term which will cover both in a better way. However, using completely two different terms will mean that we need to restructure the whole standard separately for social and commercial. While most of the governance requirements, etc., with regard to social and governance will remain the same. So actually, we did not want to develop two completely different standards where one standard can provide principle-based guidance which will be applicable on all these type of transactions. So yes, we can still consider that to provide it separate, but a single term might still be needed. Again, we are going to take your comment going forward, inshallah. Brother Mahdi Ahmed, can we consider including Islamic crowdfunding containing both commercial and social element combined? Yes, this we completely agree that there should be hybrid transactions which should include a commercial and social element both. Like, for example, you can create a financing transaction for a hospital. Now, it should be like, you know, ideally we would say that it should be at a discounted rate, at a more feasible rate, including that element of you know, support. Like, for example, you can arrange like, you know, some combined transactions also, where some part may be funded on social basis and some part may be funded on commercial basis. So yes, exactly. And again, I would say the ideas that can be applied through Islamic crowdfunding are very, very vast. You can have hundreds of different ideas that you can apply there. So for example, there is a hospital, you can make some funding purely on social basis and some funding on a discounted commercial basis, and maybe even some funded on a commercial basis. So there are a lot of different approaches that can be applied. It is actually, I would say that Islamic crowdfunding is actually a means to execute different type of transactions. So the transaction that you want to do and the funding and the support that you want to do is actually going to take place at the level of planning of the product, not at the level of setting up the crowdfunding setup. We have a question from Brother Sadaqat Khan. Can an investor earning non-Sharia compliant haram income should be permitted to invest in Islamic crowdfunding? Thank you very much, brother, for a very good question that speaks of your experience. Allah bless you. Now, the question same applies like bank. On the banks, Sharia boards have taken different views. Like, for example, for some of type of the transaction, they say that if the person is known to have haram income and haram source of income, it should not be combined. Like some of the banks don't allow conventional insurance companies to make a deposit in their mudarba pools. So this is just one example. So it actually again will be dependent on the type of product being utilized. We have put in some requirements for screening of the users and screening of the investors. So yes, it will depend on the nature of the transaction. So if it is masjid being constructed through a crowdfunding setup, and we all know that haram income is not allowed to be invested directly in construction of masjid. So what should be done, that once the Sharia board will be giving fatwa with regard to this, they will be clarifying these parts on the investor part as well, the investor or donor part. So then the screening of investors will be done in the normal manner. So this is the way that we can actually handle these sort of issues. The next question, Anar Yusufzada. I believe Takaful pool is structured as crowdfunding. Have you considered this? Very good comment. But I would just say that even the bank is a crowdfunding. The idea of crowdfunding is making the things less structured, less regulated, more convenient, technology-based, having access to masses or through electronic means, social media, etc. So yes, all of it is crowdfunding. And actually even the stock exchanges, what they are, all the stock exchanges, the way they work, they are actually crowdfunding platforms. The only thing is that all stock exchanges, I have heard from a management expert that actually the first stock exchange that was done was like, people sitting on a table, like, 2-3 people sitting on a table in the shadow of a tree and collecting money for investment in businesses. So that was the real crowdfunding at that point of time. The only thing is that crowdfunding over a period of last 2 centuries or so, or maybe 3 centuries, it has developed at a manner, in a manner and at a scale that it has become too much structured and regulated. Now you need to make things easier for the smaller businesses as well. And again, as I mentioned, I personally believe Islamic crowdfunding is something to support the real Islamic economy. So if you see, you can well understand that a common man today cannot have access to stock exchanges. But a common man, a small shopkeeper, can have access to a small Islamic crowdfunding platform. That makes the huge difference that we are talking about. So the stock exchanges and the banking system and the insurance system invariably supports the capitalist economic system. even if we do them on an Islamic basis, they invariably support the capitalistic economic system, because they are all part of that capitalist economic system, and they are all coming through that Islamic capitalist economic system. While this Islamic crowdfunding, why I'm so much optimistic about it personally, that it provides an opportunity to the small scale businesses, to the small scale opportunities and small scale investors to actually do business in the right way. Again, it needs good governance, it needs Sharia compliance, it needs reliability, it needs transparency, it needs financial reporting. For that purpose, we are developing this standard. So it might still, some people said that you are putting this standard very strict. We believe that crowdfunding is a great solution, but if you leave it without governance and Sharia compliance and transparency principles, it may lead to frauds and problems. That's why we are doing it. But in a nutshell, we believe that it has the potential of changing the complete the existing banking system. Okay, next question. What the Sharia mode of management that governs ICF, Wakala, Mudarba, or maybe Musharka between the investors and ICF manager, and the prospective consequence on applying each mode of management? Dr. Fadlur Rahman Ali Muhammad, thank you very much, brother, for your question. Let me summarize quickly. The Islamic crowdfunding functions only as the facilitator. The operator functions only as the facilitator. So the transaction actually takes place between the issuer and the investor. The ICF manager, we don't use the term manager, we are using the term operator. The operator doesn't become party to the contract. So this way, the intermediation like banking is not done. Rather, it is facilitation rather than intermediation, if you want to change the term. So what happens that the investor creates the issuer creates a need for a Islamic crowdfunding campaign or issuance, and for that, operator helps him in finding the investors or donors, and then there is a direct transaction between the two. So in this situation, the manager or the operator doesn't enter into any musharka type of transaction. However, any type of Islamic finance structure or a donation structure or a charitable transaction structure can take place between the fund providers and the issuer. More we will be able to understand when we go through the standard and in detail, inshallah. We have a question from Brother Hamid Hikmani. Maybe I don't understand, but what is the security or assurance that one who issues a campaign is genuine or the purpose is genuine? What kind of security or trust should be provided? Say, if one wishes to build a large mosque with a madrasa. Brother Hamid Hikmani, thank you very much for the next question. Actually, this standard tries to answer this one, that what are the minimum controls on each of the aspects with regard to governance, transparency, etc. So you will have to go through us with the standard, and I would suggest, because today is a public hearing, but I would suggest if you want to understand it well, I think you may go through the standard in more detail, and there are some good guidance available on internet as well. I'll try to explain more when we go through the detail. Then we have Nurbaizura Jabbar. Social crowdfunding is easier since it will be based on donation and the donor will not be expecting any returns. However, for equity crowdfunding involving funders might require extensive KYC and also the terms to cover EOD and material adverse events. My next question, in the event of default or restructuring, will the platform provider facilitate this type of exercise? Now, a very good question and very good comment. But again, I personally don't believe doing easy doesn't mean that it serves the purpose. For example, I create a completely false campaign. Oh, I am doing a masjid. I am constructing a masjid. And I go on internet and I get money for that masjid. This thing was done even before invent of internet. A lot of people used to do that, and still they do it. On a lighter note, you know, there is a, in Pakistan, there is a mid-sized city called Hyderabad. Hyderabad city railway station. There was a masjid being constructed on platform number X or Y of that railway station for so many years that from every train the people used to go in and take donation. So you can well understand that this thing can be done even without Islamic crowdfunding, and people can do that. Again, donor is giving money, but the donor's money needs to be used for the right purpose. I can tell you that even the success of Islamic social finance cannot be there unless you make sure that there is return. And actually, that was one of the reasons that our governance and ethics board mentioned that we want to use the term investor, because it's an investment for value purposes, not for money purposes. So even the social, it's an impact investment. Even the social crowdfunding should create an impact. So, and secondly, I can tell you the KYC requirements now are becoming equally important for the social aspects, considering lot of regulations with regard to, you know, KYC, and with regard to anti-money laundering and for terrorism financing sort of, like, you know, controls. So it is maybe equally important. So we believe that the KYC and other requirements in line with the regulatory requirements will still be there. With regard to the operator, he cannot provide any guarantee. Operator is responsible for performing his function, but cannot provide any type of guarantee. So we have put requirements on the operator that what minimum KYC, user related, other requirements he needs to do, but we cannot make him responsible for the eventual output of the things. Dr. Fadlur Rahman, Ali Muhammad, risk of malfunctioning, commercial risk, etc. No disagreement to that. Fully agreed. Sorry, it is connected with the earlier one. So, so what the legal and risk aspects of considering ICF as an operating facility, risk of failure, etc., risk of malfunctioning, commercial risk, etc. Brother, no disagreement on this part. Only thing, we tried to cover all these things through this standard, and you need to provide specific comments with regard to some of the aspects of governance, etc., that we have put in. Muhammad Vitroh, Assalamu alaikum. I read the Islamic crowdfunding standard at a glance, but unfortunately, I could not find any definition regarding the financial regulator or supervisor or institution that regulates and supervises Islamic crowdfunding in the country it operates. It is necessary to add a definition regarding financial regulator or supervisory institution. Is there any Islamic crowdfunding regulation or supervisory action from the regulator or institution that is not Sharia complied? Which part of the standard that we can refer to tackle such issue? Two things. Number one, we don't need to provide a definition for that. Every country has different function. We believe that most countries, in some countries, even it will be under the central banking regulations. In some countries, central banks ambit. In some countries, it will be in the Securities Commission ambit, or in some countries, there can be special financial services regulatory authorities which will be supervising these type of activities. So we cannot define the regulator, and we cannot specify the type of the regulator. It depends on the legal and judicial regime in that country. That is first thing. Second thing is with regard to overlapping things. Unfortunately, AOIFI has no direct control over the world. Means that it does not happen that we develop a standard and everybody in the world starts adopting it automatically. So we collaborate with the regulators and we work with them closely to make sure that they adopt more and more of our standards. So once they adopt our standards, still they have the right in their country to decide which part of our standard they do not want to take, or if which part of our standard might need to be, like, you know, overridden by their own or superseded by their own regulations and standards. So considering this thing, we will take your comment, brother, but to be honest, we may not be able to make any major changes on that part. However, I can tell you that most regulators who work with AOFI with regard to Sharia compliance part, they leave the things on us mostly. And with regard to governance part, they want to adopt our standards, but also want to keep some control in their hand as well. So it goes on normally it goes on a hybrid basis. We have question from Sumbul Qureshi. In my humble opinion, there may be a need for segregating commercial and social crowdfunding standards. Most of the financial regulators allow only commercial financial crowdfunding licensed activities. Social crowdfunding is excluded from majority of the financial regulatory frameworks because of high risk of money laundering and terrorist financing risk. Social crowdfunding standard may be segregated and considered in comparison of regulatory framework of social crowdfunding authorizations. Thank you very much for your comment. We'll take that comment to the board. However, I will request you one thing specifically, that if you can kindly identify what makes the real difference, what are the principles that we have put in which may not be applied, because the way we have developed the standard, we put all the core principles in a manner that they apply on commercial as well as social as well as a hybrid product. With regard to the AML and fighting the terrorism and all these things, we have mentioned that the local regulations will be applicable, and in their absence, we have put some requirements in the appendix, which are the minimum requirements to be covered with regard to these aspects. We believe that we want to develop Islamic economy. For that purpose, we need to bring both commercial and social crowdfunding. Putting two standards from our perspective was actually going to be an extra burden, but again, we are open to have more comments from you in more detail if you can exactly provide where it makes a real difference. With regard to a regulator who does not want to allow social crowdfunding, this is their prerogative, irrespective of adoption of this standard. So there can be countries who can still adopt these standards, but will not allow certain type of transactions, which include the social crowdfunding because of the risks that you have mentioned. Thank you very much for that kind comment. And I would highly appreciate if you can provide further comments with regard to the details. We have comment from Sami Poiraz. Is there any section in the standard regarding follow-up reports of the project or user of the fund invested donated? Thank you very much. Once we reach that part of the standard, you will find that comment, inshallah. That is actually for open-ended and continuing transactions. There are additional requirements. So if there is an open-ended on continuing transaction, there are additional financial reporting, even audit and Sharia audit requirements, etc., in case things are material. So once you reach there, you will find that, inshallah. We have comment from Brother Muniruddin Lal Muhammad. Assalamu alaikum. Based on initial discussion on Tawarruk, I'd like to share that the crowdfunding platform is being implemented purely on equity based, though it is currently under sandbox regulation in Mauritius. So having this avoiding non-permitted activities, it is Sharia compliance without a Sharia governance, which is under consideration. Thank you very much, brother, for this very informative, informative piece. We believe that it's a great initiative, and we hope that it works well. And I believe that you may refer. I think Mauritius adopts some of our standards already, so we hope that this standard will also help the Mauritian Central Bank to help implementing this standard, and Sharia compliance part can be covered through this standard. So we hope it will be great. Thank you for that very nice comment and information. We have comment from Brother Hujjatullah Barati. Assalamu alaikum. What are the types of crowdfunding, brother? We have, as I mentioned, mainly we are covering two main types. The first one is the commercial, and the second is social. And then we have identified the another two types with regard to the continuity. So continuing and open-ended we have covered also, because they are subject to additional governance and transparency and Sharia compliance requirements. To be honest, I'm so happy to see that people feel very much, interested in the topic, and the number of questions that even we are still on the definition phase. And I was saying to Brother Rizwan, Dr. Rizwan, that I'll try to squeeze the presentation a bit, but I feel it may take more time than we originally planned. But it's good. I personally feel very much happy if people seem to be interested like this and putting so many questions. Brother Khalfan Abdullah has a question: what distinguishes the operator and issuer? Do they have to be always separated? Generally, yes. It's a good question, because there can be a crowdfunding platform created by an issuer for himself. For example, there is an issuer who for himself creates campaigns. So technically, it's another type of crowdfunding. So for example, like there is a large large NGO doing a lot of social work. So if they are creating campaigns on their own website through their own payment mechanism for their own projects, so in that situation, an operator and issuer is the same, but we are actually not talking about these type of transactions, although for some people it may also be a type of crowdfunding. We believe that it is not the subject and scope of this standard, but yes, it can be possible. However, in our standard, what we are talking about, the operator is only the facilitator who is connecting the investors with the investee or the donors with the donee. We have comment from Sister Ghalia Shamri. Can crowdfunding be used in microfinance projects? In the event of entering into crowdfunding, has there been agreement with Islamic Financial Services Board about the weighting to be applied when calculating capital adequacy? Sister, both questions are completely different. So let me first handle the first question. Can crowdfunding be used in the microfinance projects? Exactly, yes, but not in all cases. For example, if you want to have, because when we say technically microfinance, which means that the financing amount is very minor. So for an individual person who wants to use it, it can be used in two manners. One is there are some crowdfunding platform, like there is one product called Kiva. There are some others like that. What they do, they connect an investor with the investee directly. So, and I believe that even I saw a good platform coming out of Pakistan, I think CDOUT, which got ISDB prize as well, that also more or less does the same thing, because it provides you an opportunity to invest with a person directly. So yes, this is an opportunity, but this is not exactly what we are talking about in this one, because that one is again more like the one where you are actually doing the microfinance activity only by using the means. While here, we can do it in one manner where we can provide funding to microfinance institution that can take it forward. Or what we can do, that we can create microfinance initiatives, and those initiatives are funded by investors, and then those are used. Connecting one-to-one is also a common product now, becoming a common product now, but that actually is not crowd, because it does not technically create a crowd. So yes, we believe it's a good product. Yes, we believe that is useful, but here we are talking about one step ahead of that. Normally, when you say crowdfunding, you are expecting that there will be a crowd who will collect their money, and the collected money together in form of a bunch of money that will be funded or supported for one project. So at one end, there is a crowd, not only one-to-one connection. So one-to-one connection is not technically crowdfunding from our perspective. Now, coming to your second question about IFSB, we are not expecting that Islamic banks are going to do this Islamic crowdfunding activity. So for that purpose, we are not concerned about this one. However, we have mentioned in this standard that, that the Islamic crowdfunding operator should have minimum capital in line with whatever regulator defines for that. Brother Khalfan has another comment. I suggest defining platform should mention platform operator rather than just operator. Actually, we kept the platform provider and operator two different. We said that in some situations, the operator can himself be the platform provider. And in some situation, the platform provider can be different. So we kept both options, and that's why, brother, we did not use the term platform operator. Rather, we use the term operator separately and platform provider separately. And we mentioned that operator can also be platform provider, and at times he may not be platform provider. It depends on whether the operator himself or itself is a technology company, or it is dependent on another technology company to provide platform. We have another question from Brother Hamid Hikmani. Okay, this is just a comment, so we take that comment. We have another comment from Brother Badru Jafar. Assalamu alaikum. Is ICF social or commercial? And if commercial, what the underlying Sharia structure? I have explained this part, brother, already. I do not want to repeat it. And when we go through the standard, we'll find the answer. In nutshell, it can be both, and it can use so many different Sharia structures. We have question again, comment from Brother Muhammad Ali Malik. Does the crowdfunding work on the concept of asset-backed financing? As I explained in case of Sukuk, yes, there can be asset-backed financing also. That will be an ongoing and continuing transaction. So in that situation, yes, it can be. So it can take form of it, but it is not always like that. Dr. Fathul Rahman, again, another comment, the relationship between ICF and blockchain tech. Again, technology is not necessarily blockchain, but we believe that it should normally be blockchain based to ensure security, etc. However, the relationship between ICF and the platform provider is like, you know, okay. I think I misunderstood the question first. Let me understand it again. The relationship between ICF and blockchain tech. Okay, ICF can be based on blockchain. That's simply like that. So it can be based on that. Okay, but it's not necessarily always based on blockchain. Sister Zagalia has another question, how to calculate ECL according to standard 30. This is a question, sister, which is not relevant as of now here. So we can take it separately because it will, if you are talking in the context of Islamic crowdfunding, then the platform doesn't do it, and it will be a person to person. So normally FAS 30 will not be applicable. I think the role of operator should be extended to have more control to monitor to the spending of the money against the right purpose. It should not only connect each party through the platform, but it should play a bigger role in the transaction. Very good comment, brother. We will take note of this comment. Actually, we had to keep a balance between the two, because when we increase it, people say, okay, then you make crowdfunding impossible. You make it not feasible for the market. So we need to keep a balance between feasibility and ease of functionality versus the quality of governance and controls. So thank you very much for very good comment. Your name is not there, brother. It would be good if your name is also there. So if you can just rename yourself as and kindly put your name, please. We have a comment from brother Sheikh Mahsham Masalhi. Assalamu alaikum. Wa alaikum salam, brother. Can we know the major Sharia non-compliant risk covering crowdfunding platforms? Thank you, brother Sheikh Hasham. Sir, your comment will be dependent on, that answer to your comment will be dependent on the type of transaction that is undertaken. So depending on the type of transaction, it may be a normal Sharia compliance risk, non-compliance risk, like financial transaction in banks, and in some situation it can be completely different. Like, for example, one example I mentioned, even in case of social, can haram money be used for masjid construction? So there can be even additional type of risks which are normally not there in the banking. So the Sharia board of the operator has to be very careful about these points. So on one hand, I'm very happy that it is so much interactive and there are so many questions and things. But at the same time, maybe we are running late. So now I need to be a bit quicker on the continuity with the standard. Okay, Islamic crowdfunding issuance. Now we need to understand what is the ICF issuance. ICF issuance is an individual offering or instrument of Islamic crowdfunding and includes its entire life cycle. It is also at times referred to as a project or a campaign. So what we call an ICF, I would refer to the comment from our sister like Sukuk. So actually an ICF issuance is like a Sukuk. But again, Sukuk always is more structured and is always generating returns and is always for a period of time, etc. ICF issuance is not necessarily for a period of time, not necessarily carry a return. At times, it is just, invested in social purpose. At times, one-time transaction is done and it is ended. For example, the common type of equity crowdfunding will only generate equity for the company, for the issuer, and after that those who invested will become the common shareholders of that company. So the ICF issuance ends here. So it is, for a lot of purposes, it is like Sukuk. So the standard that we have developed has a lot of similarity with our Sukuk governance standard, but the requirements are much simpler and much relaxed as compared to Sukuk standard. Islamic financial institution is the common definition that we use. However, we say that there is an explanation in the specific context of this standard, an operator, but no other element is considered to be an IFI unless it is established specifically as an IFI. Issuer is a person, natural or juristic, or an association of persons that raises or seeks to raise in the initial stage funds for an underlying operation through an ICF issuance using as crowdfunding platform. So we use the term underlying operation. So whatever the project is, we use the term underlying operation for that one. Management is a specific definition. Again, in the specific context of this standard, the management has a definition. Explanation: for the purpose of this standard, the management generally refers to the issuer's management unless specifically mentioned otherwise. The reason is that since the money actually goes to the issuer, so eventually whenever we talk about management, it actually is talking about the issuer management. Now, two important definitions here: ongoing ICF issuance. An ICF issuance is an ongoing ICF issuance is an ICF issuance in which its structure is by its nature an ongoing transaction or venture, such as ijara transaction or a musharka or a mudarba venture. Depending on its nature and the respective terms and conditions, it may or may not have a fixed maturity date. For avoidance of doubt, it, however, does not include an equity ICF issuance, which results in issuance of equity shares of the issuer, whereby the ICF issuance concludes at that stage. Open-ended ICF issuance is an ICF issuance in which the investment amount of issuance does not have a ceiling limit or a specific period of investing. Depending on its nature and the respective terms and conditions, it may or may not have an early redemption option for investors. So it is assumed that it is going to be an open-ended and there can be ongoing investments in that purpose. So it's not like one-time issuance, rather it's an ongoing issuance in which you can go time to time and you can invest more. Operator is an entity that provides Islamic crowdfunding services directly or under a service contract with the platform provider, thus connecting the issuer to the investors in an ICF issuance. Personal information or user's personal information is any information in respect of an ICF issuance or the platform that relates directly or indirectly to the user who is identified or identifiable through that information directly or in combination with certain other information in the possession of a person having access to such personal information. Platform, particularly for those brothers who are getting confused, platform is the crowdfunding system operated by or under the instructions of an operator that connects the investors with the issuer and the operator, and normally includes a website, web portal, and or mobile application accessible through electronic means of communication, normally the internet. Platform provider, unless the function is performed by the operator itself, is a party that provides and manages the platform under the instructions of the operator by virtue of a service contract with the operator, and is responsible for the functioning, maintenance, update, and or security of the platform. Prospectus, also referred to as the information memorandum, is an offering and disclosure document that describes and presents for investment and ICF issuance to the prospective investors. Sharia compliance is the adherence of the Sharia principles, adherence with Sharia principles and rules applicable to Islamic crowdfunding structures, relevant features, contracts, and various other arrangements, including operations and activities during the life cycle of the ICF issuance. Sharia compliance department, we have put some requirements for that, and Sharia compliance function, we have put some requirements of that in paragraph 16 to 19. Sharia principles and rules is the specific definition that we use in line with our standards, earlier standards. So we just keep the same hierarchy in all the standards. Sharia Supervisory Board, for this purpose, is a board. And now there is one thing important which we need to understand, although we are going to have a complete section on that. But actually, there was a confusion where you put the Sharia board. The money is going to the issuer. Issuer is using the money. Operator is not using the money. You put the Sharia board with the operator. What is the benefit in that? You put the Sharia board with issuer. So can every issuer who can be a shopkeeper who is actually enhancing or reconstructing and renovating his shop, or it can be a small company raising capital, can all of them have a Sharia board? So there were a lot of challenges in that, and we decided that there should be a Sharia board for every ICF issuance who should provide a fatwa on the ICF issuance. And if it is an ongoing transaction, then the Sharia board should also continue if it is open-ended or ongoing. If it is not open-ended or ongoing, then you don't need the Sharia board to continue. It can give one-time opinion. So we allowed that the operator can appoint one Sharia board, and that Sharia board can function for all of the ICF issuances that are being handled by that operator. This is a summary of the section that we are going to read going forward. Now, coming to definition of social Islamic crowdfunding. Is the Islamic crowdfunding whereby the underlying operations are of non-commercial nature, and the ICF issuance either does not carry a return on the amount of investment to the investors, except for the return of investment amount itself to be utilized for the intended purpose, as the primary purpose of providing funds is that of impact investment, that is value creation through achievement of social objectives. So even a Qard Hasan can be part of it. So either it can be a donation or it can be a Qard Hasan. It does not carry a return, but original amounts can be refunded. And second, or is in the nature of a donation whereby the investment is utilized for value creation and the amount of investment is not intended to be returned. So either no return, even the amount is not returned, or only if the amount is returned. Then we have the definition of Sharia board report. Then we have another element that is called trustee. Now, as of now, all Islamic crowdfunding operators do not have a trustee or a fiduciary. In some cases, they have a trustee or a fiduciary, but the functionality of that fiduciary and trustee is very limited. One of our brothers earlier mentioned that we need to improve the governance. So all of the things cannot be done by the operator. So we enhance some of the functions of that trustee in this standard. So trustee is an entity appointed by the operator with due consent of the issuer to serve as an intermediary between the issuer and the investor to hold the investment amounts until they are utilized in the underlying operations to safeguard the interests of both parties in line with the requirements of this standard and to hold the final settlement funds in the case of termination of liquidation of the ICF issuance. The trustee in different jurisdictions may be at times referred to as fiduciary or as agent. Those charged with governance, this is a common definition that we use in all standards coming from IASB definition. Explanation is important. For the purpose of this standard, those charged with governance include the board of directors or equivalent and audit and governance committee or audit committee of the respective element, primarily the operator, as well as the audit and governance committee of the ICF issuance duly established in line with the requirements of paragraph 60 to 62. Underlying operations. Now, very important point, particularly for those who are asking about the whether it's asset backed and whether it's always sukuk like. So we need to explain that it's not always sukuk like, it's slightly different as well. So the definition says underlying operations are the tangible assets, usufructs and services and or ownership of the assets of the particular projects or investments or financing activities underlying the ICF issuance and includes the respective not-for-profit or charitable activities in respect of a social ICF issuance. So underlying operations can be commercial, they can be non-commercial, completely social, hybrid, they can be based on assets, usufruct, services. So it's about the purpose and the intended use of the funds. User is a person who accesses the platform in any capacity, for example, as an issuer, investor, or a subscriber to the platform. Before we go ahead, I think there is one more question by Brother Anas Norwani. Is the standard covers the Sharia compliant tools, mechanisms that allow the issuer or the operator to benefit from the Islamic crowdfunding? In other hands, the monetization of the Islamic crowdfunding, as we don't want the operator to misuse the crowdfunding to enlarge its benefit and in account of the end user of the beneficiary, end user or the beneficiary. Brother, thank you very much for your nice comment. We believe that the whole purpose of the standard is to put reasonable mechanism for Sharia governance and transparency and financial reporting and IT-based controls, whatever are necessary to serve the same purpose. That is the purpose of the same standard. If you feel that that any additional controls, etc., need to be built in, please let us know. Brother Hamid Hikmani, trustee is very interesting, but are there benchmarks or criteria for the appointment of fiduciary or agent? Some countries, Brother Hamid, some countries, I believe that UK and some other countries have mentioned the use of trustee, and I think Malaysia also. Again, the regulations that are there right now are for crowdfunding, not for Islamic crowdfunding. But they at some places have mentioned about the trustee or fiduciary, etc. We have enhanced the functions that we were able to find. So from our standards perspective, the function of trustee or fiduciary is a bit more as compared to other regulations that we were able to see. Thank you. We are going to keep this option open for your comments if we can enhance those requirements where necessary. We have a comment from Sister Sherin Usman. Can you please call it non-Sharia compliant fund and not haram money for a lot of reasons? Thank you. We take your comment. We'll take it to the board and we'll see whether they prefer using the term non-compliant or Sharia haram money. We'll take it. Thank you very much for the important comment. Brother Sadaqat Khan has another comment, whether or not a non-Muslim shall be allowed to work as ICF operator or as a issuer, since many non-Muslims are already holding key positions at management level in the various Islamic banks. Brother Sadaqat Khan, I personally believe that anybody working in Islamic finance must believe in product at least, even if he doesn't believe in Islam. So they must believe in product at least. It will depend on the nature of the product and nature of the transactions as to whether it can be accepted or not. Let's leave this question to the Sharia board to decide, because we are asking the operator to appoint a Sharia board. So let them decide this thing rather than we decide it ourselves, because we need to keep options open. But I believe, Muslim or non-Muslim, if you are working on Islamic finance, you must believe in the product. Unfortunately, we have even Muslims who don't believe in the product. So it has to be more about focus on the product understanding and believing in the product. Okay, let's move ahead. We have a long way to go.
Brother Umar, Brother Sadaqat has also raised his hand, so I'm not sure if the question, he has already asked his question.
Okay, let's take his comment as well. Brother Sadaqat, you are invited, sir. I think you are permitted now.
Yeah, thank you, Brother Umar. Yes, you have already answered my question. I raised for this only because currently, as I am aware about many of the banks in the Islamic bank on the key positions. I'm not asking the lower position, key position, top management level being run by non-Muslim. So the question comes and people ask whether these people would be considering the Sharia compliance as their priority, or they will be considering only the business. Because a Muslim can understand the need of Sharia compliance religiously and statutory or as per requirement. So it is a common question from the general public I'm facing, that why then the top management, they should be allowed leading position. Lower position is okay, a leading position. And the leaders are required to maintain Sharia compliance at desired level. So this was.
Thank you very much, sir. Thank you very much. We take a note of your comment, and AAOIFI's view is, as of now, is that AAOIFI only for with regard to Sharia board, etc., considers this thing. Otherwise, AAOIFI doesn't insist on this thing. But I believe that the belief in the product is necessary, and being truthful and being faithful to the product and being faithful in actually executing the transaction is necessary, irrespective of the position.
You're right. The belief on the product is something else, but doing execution of the product, maintaining Sharia compliance level is different.
Sir, unfortunately, most of the Sharia non-compliances that are happening as of now are happening in the hand of those who call themselves Muslims. Sorry to say.
Okay.
So, and all type of frauds are also happening in the name of, so honestly, I believe that this is not our subject for today. We can have long
please go ahead, brother.
No, I agree with you. But the point is that I don't have a disagreement with your main concern. Unfortunately, my concern is that even Muslims are not taking care of this thing.
You are right. I observed all the things you are saying.
Yeah. So let's pray. Okay, and I think that things will improve with time. But I can tell you, sir, the banking system fundamentally has the mindset issues. Muslim or non-Muslim, the system of banking has fundamental issues. The system of banking, the system of insurance, system of these stock exchanges, the system of these commodity markets, they are all built to support the capitalist economic system.
Yeah, that is business
So we
mind.
need to keep it in mind that we need to come up with the newer solutions, and I hope that Islamic crowdfunding can provide one of those solutions where we can actually work towards development of a real Islamic economic system.
Great.
Thank you very much, sir. Let's move ahead. So
Please.
now we have part A, which is about core principles of governance. The 5 core principles are more or less the same that we follow in our all standards. If there is a comment, we can take that. Then we have the key stakeholders of Islamic crowdfunding: the operator, investor, and the potential investors, issuer, trustee, platform provider, and the regulators. And then we have mentioned core principles here with regard to this standard. Ensuring Sharia compliance, enhancing stakeholders' confidence, ensuring fairness and equity, assigning responsibilities appropriately, ensuring transparent and viable business models, then ensuring accountability, fulfilling social responsibility, ensuring ethical behavior, ensuring competence and suitability, ensuring effective supervision and oversight by the regulators and by the management, SSB, all of them, ensuring adequate risk management mechanism, ensuring adequate level of disclosures and transparency, whereby the offering document, particularly this is very important, prospectus, information memorandum, etc., they provide all necessary details, obtaining independent opinions on compliance with Sharia principles and rules, maintaining appropriate model for dispute resolution and arbitration, maintaining control, ensuring effective enforcement, whereby these are, I think the list is done here. Now, these are the core principles which are developed in line with the fundamental pillars. Now, this whole standard is trying to ensure that these core principles are actually converted into the working mechanism through having a good governance, transparency, control mechanism, Sharia compliance mechanism on an overall basis. So that was part 1. Do we have any comments on part 1? Okay, so we come to part B. Part B is about we start with the key elements. So the first is the list of key elements. These key elements are the subject of this standard. So there are some requirements with regard to these elements applicable at different stages. So the operator is the first one. The platform is the second one. Platform provider, if different from the operator, is the third one. The trustee has to be separate. The investors are there. The issuer is there, and the underlying operations. Issuer normally owns underlying operations, but at times underlying operations can be a specific segment, a specific project of the issuer. So at times the underlying operation will be comprising of the full business of the issuer, and at time it will be a specific project. Now, coming to operator eligibility criteria, what we are saying that it should be in line with the relevant regulatory requirements, and if there are no regulatory requirements in the region, in the jurisdiction, then global best practices should be observed. Regulatory approvals are necessary. We believe that crowdfunding is something about getting people's money and collecting money. So it should not happen without regulatory approval. So there is a requirement that it should happen with the relevant regulations. And operator shall ensure that a crowdfunding service is not offered in a jurisdiction where the regulator has prohibited, because the point is that it is done on the cloud, it is done on the internet. So if it is not allowed in a jurisdiction, it should not actually happen through physical or digital means. So it means that, for example, there is a country that has not adopted Islamic crowdfunding, but because you are having a platform and you think that you can do this in that country because you are doing it on the internet, it is not allowed and not preferred by this standard. So this standard is not there to support any illegal activity or any unregulated activity. The operator, applicability of relevant AAOIFI governance standards. We believe that the operator for the purpose of this standard will be considered generally an Islamic financial institution. So it should be following all governance standards of AAOIFI in addition to the requirements of this one. The operator should establish a Sharia compliance function in line with this requirements of this standard. And what it needs to do, in a nutshell, to summarize, the operator itself is actually just passing through the money. It's just facilitating. But the point is, can we ask each of the issuers to have a Sharia compliance department for themselves? It will be too much to ask. So what we have decided and what we have recommended is that there can be one single Sharia compliance department by the operator, and that Sharia compliance department shall have the overarching right of the Sharia compliance on the different transactions done by different issuers. So one department can function for multiple ICF issuances wherever the function and the work is needed. Same applies to Sharia compliance function, because there is one thing is department, then we talk about the function as a whole, which includes having controls and having functions in place to ensure Sharia compliance, which include the internal audit, IAS, IT audit. All those things should be properly integrated to ensure Sharia compliance. So we have put this requirement again on the responsibility primarily is with the issuer, because underlying operations, for example, I am the issuer and I took money from you and I said, okay, I'll be running a small shop which will be selling halal goods. Now, what happens that I took your money and I started selling haram goods? What happens? This is the situation where if it was an ongoing transaction or an open-ended transaction, then the Sharia compliance function need to function all the time. But me being a small shopkeeper, you cannot ask me to set up a full Sharia compliance function and department. So for that purpose, the responsibility has been put on the operator to make sure that they address this issue with regard to each of the ICF issuance. Then capital and liquidity maintenance by the operator. We have put requirement on the operator that whatever capital requirements and liquidity requirements are there as per regulatory requirement, they should keep it, and they should be following global best practices with this regard. If there are no regulatory requirements, still there should be some minimum capital and liquidity maintenance by the operator. Then we have talked about the operator for use of technology and automated processes. The operator shall ensure the operation or adoption of appropriate technology and technological solutions as relevant to the entire life cycle of the ICF issuance. So a lot of Sharia compliance related controls and other controls can be put in by use of artificial intelligence, smart contracts, machine learning and algorithms, and standardized processes. So we are saying that the technology should be used in a proper manner to ensure the quality of controls, etc., reducing human intervention and improving the cost effectiveness of the ICF issuance. Governance and control requirements applicable to various other elements are mentioned in different paragraphs in the upcoming section C. So let's see if we have any comments on part B. We have Brother Khalfan Abdullah has a comment, why SSB is not amongst key stakeholders. Brother Khalfan, SSB is not a stakeholder here. SSB is actually a control process or a governance organ here. So they are a governance organ. They are not a stakeholder here. Sister Ghalia has a comment, is there any administrative board for crowdfunding? And if the answer yes, how to organize its relationship with the Sharia Council? What we have said, again, sister, I think you should keep your question for now with yourself and ask it again towards the end. Reason being that you are asking for generally crowdfunding. You are not mentioning, you are asking it for the operator or the issuer or the ICF issuance, etc. So I would suggest you first go through the standard with us and read it again, and then you can actually ask the question, because this question otherwise will need so much time to explain. So I think in the next few slides, we will be actually explaining different functions, how they are actually functioning. Then your question will be more relevant. We have comment from Sister Shireen Usman that I believe it's the sister. The issuer is the party who uses the money without having an internal Sharia board. Integrity is in question. That is the reason that we said that for each ICF there should be a Sharia board. So for every ICF issuance there is a Sharia board. But if it is a small party, how you can ask each one of them to appoint a Sharia board? So what we decided, that there will be one Sharia board at the operator, and that Sharia board can function for each ICF issuance. But if the ICF issuance is big, or if the issuer want to appoint their own Sharia board, they can appoint it. So we are not saying they cannot appoint it. We are saying every ICF issuance must have a Sharia board. So your comment is addressed here. But how to make it cost effective and practical, we kept some options open. So we don't have a disagreement here. Second thing, Sharia board integrity is in question. Again, integrity it cannot be handled only by Sharia board. Even an audit and governance committee is needed to address the other parts. Sharia board can handle the Sharia compliance part, but Sharia board is not there to handle the governance and transparency and financial reporting part. That is to be addressed by audit committee or the audit and governance committee. Now, coming to the part C, first thing, we are saying that journal and pre-issuance consideration. So before you start, what you need to do. So first thing is for appointment, due diligence and independence of the trustee. So an independent and reliable trustee needs to be appointed. Normally the trustee will be an Islamic financial institution or other financial institution, but it has to comply with the Sharia requirements. The operator shall perform due diligence of trustee, including regulatory approvals, independence and objectivity, creditworthiness and financial stability, demonstrated compliance with understanding with Sharia principles and rules, and compliance with best practices. Then about trustee must be. Now the requirement is trustee shall be independent of the operator and the issuer, because trustee will be holding money on behalf of the investors and will be safeguarding the interest of the investors in the times to come. So this is very important, that trustee is independent and follows good governance and ethical requirements. Now coming to the the other part, that is maintaining and releasing funds under trust. The operator shall establish and maintain in a licensed institution one or more trust account designated for the funds raised by issuer hosted on its platform, and ensure that the trust accounts are administered by an independent registered trustee, and only release the funds to the issuer after the following conditions are met. The targeted amounts sought to be raised have been achieved. There is no material adverse change relating to offer during the offer period, and the cooling off period has expired. So once the transaction starts, the money comes to the separate account to be controlled by the trustee, and only if all conditions are met, only then that amount will be passed on by the trustee on behalf of the investors to the issuer, and then the transaction takes place. Then we have a point about material adverse change. I'm skipping that. The cooling off period with regard to investment amount pledging, etc. There are some requirements in line with good governance practices and some good regulations around the globe. So I'm not going to details of each one of them. Unless anybody has a comment, I'll be more than happy to respond to that. One thing is important: where possible, the platform shall include the process controls parameters and reports as appropriate to the nature and size of operations of the ICF issuance and its underlying operation. These shall include the functions which may assist the trustee in performing its responsibilities in line with the requirements of the standard with regard to ongoing and or open-ended ICF issuances. This is very important because there was an argument between the working group and the board, the members of the working group and the board, that putting additional responsibilities of the trustee will make the transactions costly. So what is the better option is that if the systems can be improved in a manner that maximum things that need to be put in as a responsibility of the trustee can be done by the system itself, and hence the trustee's responsibility does not involve too much cost. So this is one of the important aspects that we have inserted in the standard. Then coming to the second part, issuers criteria, due diligence and capacity building. Now issuer is the one who is getting the money. So it is very important that the operator must perform a due diligence and capacity building for the issuer, and the issuer must meet a minimum criteria. So the operator shall develop the suitable criteria in line with the regulations and requirements of this standard. And the issuer must be, we have put some conditions here. The issuer, normally the issuer shall not be an entity having commercially or financially complex structures, because Islamic crowdfunding is more about less complex and simplified transactions. So for example, investment funds, companies, financial institutions, except for microfinance, we kept an option for microfinance or a non-banking financial institution to keep the things possible for them. But other than that, a complex structure or complex financial structure should not be actually eligible for getting Islamic crowdfunding. Similarly, if a public listed company is there, it should be going to the to the more regulated options of stock exchange and other, rather than coming to Islamic crowdfunding. So a subsidiary of public company or a public company itself, public listed company itself, should generally not be a criteria for Islamic crowdfunding. A startup entity with no appropriate business plans, or an entity with a bad track record of financial performance, etc., so they should not be subject to funding, subject to ICF. Additionally, even if there is a blind pool, or where the business is to be like merged with others, etc., these sort of plans which are not very concrete, not very clear business plans, they should be discouraged for the purpose of Islamic crowdfunding. So issuers should not be like that. Secondly, the issuers due diligence must be performed. Issuer must submit information as necessary about business plan, submit financial information, submit information or document about whatever is required for ensuring Sharia and legal and Sharia compliance. And estimate of fair value of the business is very important, and the underlying operation both. Whenever you are actually having a transaction, you need to provide whatever support is needed to confirm that the stakeholder interest is safeguarded to a maximum level. So all this information for the transparency purpose we have put in, and the purpose of fundraising and targeted offering amount, and any other information that facilitates potential investors in investment decisions. So whatever necessary information should be there, for supporting the investors, should be provided, and a due diligence must be provided by the operator of the issuer. So while again, this is responding to one of the comments that we earlier received, that operator should be more responsible. So performing due diligence of the issuer is a responsibility of the operator. The issuer's due diligence has to include the following aspects. The operator shall perform due diligence to assess its suitability and that of its underlying operation before hosting it on the platform. Such due diligence may be outsourced to a professional firm, particularly in the case where the size of ICF issuance is relatively material, or where the inherent risk with the issuer and the underlying operations are high. So this is a very important point. You are a mid-sized company, you want to go for Islamic crowdfunding. If you come to the operator, if the operator feels that the size of the transaction is big, then they should be appointing a professional firm to perform that due diligence, rather than just taking a risk on the money of the investors. Generally, such due diligence should be performed in line with relevant regulatory requirements. However, in absence of such regulatory requirements or guidance, the minimum requirements contained in this standard, which are in line with global best practices, shall be followed. Now, coming to the next part, this was the part about the issuer's capability, business, etc. But the second part about issuer is about KYC requirements, AML requirements, combating the financing of terrorism requirements, etc. So these are the requirements and the update is also needed to be done with regard to that. So we leave it mainly to the regulatory requirements, but if the regulatory requirements are not there, then some of the minimum requirements are contained in this standard and the appendix. The operator, when necessary, should be performing for performing this due diligence may provide the information like this, like names and locations of suppliers, banking information, corporate history, field visit, other measures, whatever is necessary to ensure that it is actually a real business which is actually in need of money, and it is actually going to be going to be able to use that money in the right manner. The operator and trustee shall evaluate the investment related risk factors to be high and amounts of investment to be relative material. It may consider other additional measures. So before going to funding, you must ensure that if things are riskier from risk perspective, or amounts are bigger, then for the purpose of safeguarding the interest of the stakeholder, additional measures should be there, which may include having the guarantees, securities, takaful coverage, mutual takaful system can also be recommended, things like that. We have actually recommended, this is a very good recommendation of this standard, that it is recommended to develop a model of mutual takaful, mutual guarantee for various ICF issuance in a manner that can address the collective risk of Islamic crowdfunding investors at either the jurisdiction level or the operator level in case of sizable operators. So this is a recommendation from our standard, which can actually significantly help improving the risk profile of ICF transactions. I can see there is a Q&A, but I think let me complete this issuer part, then let me see what the comment is. The issuers capacity building. Now, this is also very important. The issuers are coming from less regulated sectors, less developed sectors. At times they might be social institutions, at times they might be small businesses, micro businesses, or maximum medium businesses. So it is a very big risk that they may not have adequate capacity with regard to understanding of Sharia compliance, financial reporting, governance requirements. So we have put these requirements that the operator has a responsibility to ensure, preferably through digital means. For example, they can provide online training programs to the issuers, where they can understand requirements of compliance with Sharia principles and rules, and the contractual requirements of the ICF issuance, the record keeping and financial reporting requirements, and the best practices of governance, etc., whatever are applicable on them. Investors criteria and categories, we have put requirements with regard to the category requirements from the investors perspective. The investors should be submitting some minimum requirements as users of the platform, and as possible investors the necessary information that may enable the operator to fulfill the regulatory and Sharia compliance requirements, and to properly categorize the investors. So all investors may not be good enough for every type of ICF issuance. So and there are Sharia issues at times as well. Like the example we mentioned earlier about masjid having Sharia non-compliant income coming in. So these sort of things are there, where we need to actually get a minimum sort of information about the investors and the criteria and the classification of the investors as well. So some of the other information in line with the regulatory requirements or other minimum best practices, like, even the legitimacy of the source of wealth, analysis of discrepancies between income, etc. So these sort of things might still be needed. So a person who is bringing in money need to tell you from where he is bringing in that money. The operator should also ensure that the investments are made subject to the limits determined by the investor's category. So this is also very important, that the investors' categories according to the proper policies. So every investor may not be allowed to, less educated investors, they should not be encouraged to make investments in highly complex transactions. Even if those transactions are considered okay, still they should be warned about going to that, and they might not be allowed to go that. Secondly, there can be different type of additional categorization, like investment association or individual customers, on high net worth individuals and retail customers and corporate customers. So these sort of categorization is also important to assess whether they are suitable for this type of investment or not. Before I go to Sharia board, there was one comment I can see. Let me take that comment by Brother Khalfan. Regulator is in control function too, so well as well, but considered stakeholder while SSB is not. Seems the stakeholder understanding in this standard is not clear to me. Brother Khalfan, I think regulators are considered for stakeholders for the purpose of taking care of the society at large. We take a comment of your point. I'm not insisting on what I said. What we are going to do, we are going to take your comment to the working group and the board, and we'll see how the board and working group sees that. Thank you very much for your kind comment, brother. Sharia Supervisory Board appointment and composition. The issuer with due consultation of the operator shall appoint an SSB for every ICF issuance. So the point is that Sharia board primarily is with issuer. But since everybody can't afford a Sharia board, that's why we allowed the operator to keep one Sharia board, or there can be multiple boards. So we kept few options. Let me read them out. The operator and the issuer with mutual consent may exercise the following options in order to cope with the practical difficulties in appointing an SSB for each ICF issuance by the issuer. A, the operator may appoint an SSB which serves as the SSB for all the ICF issuances it manages. This is the most common option, and we believe that this will be followed by most. The operator may appoint an SSB comprising of a large number of members who may appoint at least 3 members among them as SSB of a respective ICF issuance. So if the operator has so many ICF issuances and the whole board cannot be involved in that, so they can appoint maybe 10. And out of 10, at least 3 can become a board separately for each ICF issuance. So this way, a larger board can serve for a large number of ICF issuances. The function may be outsourced to a Sharia advisory firm subject to nomination of at least 3 identified persons to be members of SSB. This may be suitable for the smaller and number one, it may be suitable for the conventional crowdfunding operators coming to Islamic side, because they may not have all the facilities. So that is one. Second is, it may be helpful for the new countries where the Islamic crowdfunding starts, and even the Islamic banking there is not at a mature stage. So they may have a lack of availability of Sharia scholars, or it may also help some institutions to save cost. So for all those purposes, this outsourcing is allowed, subject to that irrespective of outsourcing, the 3 members of the board are to be assigned and they have to function fully as a Sharia board. And then necessary regulatory approvals are to be taken. With regard to the Sharia board, we said that normally the Sharia board will be subject to the AAOIFI governance standard number 1 requirements. However, unless contrary to the regulatory requirements, flexibility on the number of members and eligibility of appointment may be considered acceptable. So for where flexibility exercised, the number of members of SSB may be reduced to 2 members. In case of a 2-member SSB, decision on cases where there is a difference opinion may be reached by providing the right of additional casting vote to the chairman. So this is a flexibility that is allowed, that a 2-member Sharia board is allowed. This is only to facilitate, because the size of Islamic crowdfunding is very small. Then primary responsibilities and authorities of the SSB. Now there are 2 distinct options. A, for all ICF issuances, they need to 100% ICF issuance must have a Sharia approval. So it should be in form of a fatwa, and the initial, whatever Sharia related matters are there, the Sharia board has to provide their input, including with regard to any changes in structure, etc. Then for ongoing and open-ended ICF issuance, issue periodic SSB reports if required, and provide routine oversight with regard to compliance with Sharia principles and rules where applicable. So SSB reports are not required for each one of the issuances. Now, right to information and record, Sharia board has all the right to have access to the report from the operator and the investor. Sharia Supervisory Board appointment and composition, the terms of reference and independence, AAOIFI standards number 1, number 2, number 5, and the AAOIFI Code of Ethics for Islamic finance professionals, they all need to be followed by the Sharia board. Then Sharia board shall be accountable for their functions. and their approval and fatwa should be properly documented. That fatwa should be in line with our upcoming standard on Sharia decision making. So that Sharia decision making standard, it's not public as yet, but we believe that towards the finalization of both the standards, more or less, it will be the same. And standard number 29 by AAOIFI by Sharia board. So there are two standards to be referred to for that purpose. With regard to Sharia approval and fatwa, then we are saying that fatwa document must be contained with all the legal documentation, and along with the reasoning should be made public as a mandatory part of the prospectus. You cannot hide it from the investors and other public, so it must be available with the prospectus. The fatwa document should include the structure of the transaction, relevant contracts and documentation, description of underlying assets and requirement of their Sharia compliance, in summary of Sharia principles and rules as applicable to the structure of the units and the transfer of units of issuance between the two investors or early settlement, etc. Summary of SSB opinion on ICF issuance and approval of structure, contracts and documentation. Basis of conclusion. All our new standards require that the Sharia board must provide the basis of conclusion of their fatwa. Reservations and dissenting opinion. If there is a reservation or dissenting opinion, it should be mentioned. Signature of all consenting members of the SSB should be there, and date of issuance of the fatwa should be there. Issuance of fatwa document shall be subject to the following requirements. The SSB shall review the contracts and documentation, etc., in original text, etc. These are some of the requirements that we have put in. Even if they do not, if all of the members don't review and one of the members reviewed, then it should be mentioned that this member reviewed the translated version and the original text, and others have the original text and others have reviewed only the translated text. Similarly, if the detailed review is done by only one member, that should also be mentioned. Sharia compliance fatwa only is with the Sharia board and the central Sharia board of the jurisdiction. Nobody else can claim that. Now coming to the next part, that is about audit and governance committee. So we are saying that wherever there is a ongoing and long-term transaction, there should be a audit and governance committee. So there are three conditions. Number one, if the issuer does not have an audit committee. So if the issuer has an audit committee, issuer is a company that already has an audit committee, then you don't need to appoint a separate audit committee. If the ICF issuance is determined by operator after due diligence to have high investment risk factors, then if the ICF is ongoing and open-ended. So these are the three conditions. If these three conditions are there, then there should be an audit committee appointed separately. Otherwise, if the audit committee is already there by the issuer, that can function. The audit committee appointed will be including one chairman to be appointed with the mutual consent of operator and the issuer, equal number of members but to be nominated by issuer and operator, and preferably a member nominated by the trustee where applicable. So this will be, if it will be applicable if the issuer does not have an audit committee itself. If the issuer has an audit committee functioning properly, then it is okay, it is not needed. Terms of reference of the audit committee will be in line with the AAOIFI governance standard number 4 mainly, and in line with the requirements of this standard. Then we have put the requirements with regard to the prospectus. So these sections are about requirements of the prospectus, what should be contained in the prospectus. The operator has to perform a review of the prospectus. A minimum review will ensure that the information is appropriate in line with the requirements of this standard. Then about platform. The requirements about prospectus are in paragraph 114. So when we reach there, we'll see. About platform. Again, for the platform, there is a requirement that there should be an assessment of the capability of the platform. So whether it is good enough for having and recording the transaction, it is secure, it has security controls, etc. It can put in the preventive control which are there to ensure that there is nothing goes wrong. Financial reporting requirements are done by the platform. All these things are necessary. So we complete part C here, which was about the beginning part. Now part D is about consideration during the life cycle of the ICF issuance. So if there is an ICF issuance which is actually happening at the which is actually ongoing and continuing, then what are the responsibilities of the issuer and the issuer and other parties? So the first, coming to the issuer part, first, utilization of proceeds. So first requirement is that should use the proceeds in line with Sharia, and they should also ensure that the contractual compliance is there, and there has to be a prudent investment policy in line with the requirements of the standard. Then management of underlying operations shall be done in line with Sharia principles and rules during the whole continuity of the life cycle. So even if the issuer is not fully Sharia compliant, but at least with regard to the underlying operations, they must ensure that they remain Sharia compliant. This even applies to the social crowdfunding, Islamic social crowdfunding. Even this may be applicable for that purpose. For that, we have put some principles that can assist the management for that purpose. That underlying operations are required using the proceeds of ICF issuance shall be clearly specified in the prospectus. When it is social in nature, the value proposition and social objective should be clearly specified. Underlying operation must generate cash flow or flow of economic benefit for investors and the payment of profit and principal. The underlying operations shall be transferred to the investors by the issuer at a fair market value or value reasonably close thereto. These are again some very important aspects that need to be considered for safeguarding their interest. Any disposal, partial cessation, or change in underlying operation shall also be properly communicated, and it should be done by the approval of the Sharia board. The underlying operation shall not be relocated from one location to another. Like, for example, you purchase some assets, a machinery from the proceeds of the ICF issuance, which is subject to returns. So you cannot even change the location for that unless it is pre-approved. Contractual compliance, whatever contractual terms are there in line with Sharia principles and rules, those need to be complied with. The next part is about issuers' responsibility for Sharia principles and rules. This is a very complex part because most of the issuers are not Sharia compliant institutions by themselves. Like, again, I'm not saying that they're doing haram business. The point is that they do not have a Sharia board. They don't have a Sharia compliance function. So it is a challenge for them to remain Sharia compliant for that purpose. So it is very important that they are properly educated, and then there is a proper structure of governance and Sharia controls established to make sure that this remains Sharia compliance. The issuer's responsibility for compliance with Sharia principles and rules include accounting and profit and loss calculation. This is very important, that because it cannot be just like ad hoc profits. It has to be based on proper profit and loss calculation in line with Sharia wherever it is applicable. Underlying operation shall be used for intended purpose. You should not start using them for another purpose. And it should not be invested in such extension of product lines which are not originally calculated and which are not Sharia compliant. Good governance requirements. AAOIFI has governance standard number 6 on governing principles for Islamic financial institutions. So general governance principles which are there should be applicable to each of the issuers with regard to the requirements. So the first is that local regulations, but if there are no local regulations, that AAOIFI governance standard number 6 shall be followed. The operator shall maintain and ensure effective functioning of the Sharia compliance function and Sharia compliance department in line with the requirements of this standard. This is the operator responsibility section that starts from here. So the Sharia compliance department and function need to ensure that all the ICF issuances remain Sharia compliant. The operator may consider outsourcing the Sharia compliance function also, particularly if it is more cost efficient and effective, and if it is more appropriate considering cost, HR, or other constraints on improving efficiency. The operator also has to manage the Sharia non-compliance risk. The Sharia non-compliance risk management needs to be done properly by the operator in a proper manner in line with the requirements of this standard, and this should be integrated with the risk management policies of the operator, and it should identify and cover and measure for each of the ICF issuances and the general exposure, etc., how it needs to be worked. And obviously, periodic reports are needed internally for that purpose. Responsibilities of the operator include user feedback, support, and feedback. This is a very important part because the user, the user or the most of the users are investors. So they are normally not functioning, having direct access all the time to the issuer. Their access is mainly on the portal and their access is mainly to the operator. So there has to be proper communication channel with regard to feedback, complaints, and there should be full mechanism of updates with regard to the ICF issuances and whatever complaints and issues are brought in, they all need to be handled. And each complaint should be tracked, and this should be a minimum mechanism that this complaint mechanism or even the whistleblowing and all these things should be there in order to make sure that there is no significant risk with regard to the ICF issuances that this operator is handling. General oversight and routine meetings. Sharia board should also have periodic meetings and oversight regarding the entire life cycle, and Sharia board should also have a suitable schedule of meetings commensurate with the nature of ICF issuance. So if it is a nature, the ICF nature is like, for example, if it is a musharka based transaction which continues for several years, so maybe periodic meetings are needed. But for other types of transaction, maybe even once in a year meeting or twice in a year meeting might be sufficient. So it will depend on the nature of the underlying operations and nature of the ICF issuance, nature of the transaction underlying that, based on which the Sharia board will decide what they need to do. But Sharia board has to remain active during the life cycle of the ICF issuance. Again, it will be applicable when we mention about life cycle of the ICF issuance here. We are mentioning about those who are not ended in the first phase, rather they are continuing or open-ended. General oversight requirements, again, for ongoing transactions, there should be a general oversight. Even the charity and haram income segregation issues, charity issues, these all are to be handled. And the Sharia board Sharia board should have escalation protocol also, where the issues can be taken forward to the relevant parties if those are not handled properly by the issuer and the operator. Sharia board's responsibilities during the life cycle of the ICF issuance. Actually, the periodic reports in case of ongoing transactions should be there. Normally for the ICF issuances which are ongoing, it will be on an annual basis. In some cases, the final end report will be needed as well. It will be mentioned in Part E. I think there is a question here. We have a comment from Samir Rida. Is there any process flow for life cycle of the ICF issuance? I think we did not put a process flow. It's a good comment. Let's consider a process flow. I think it was part in the preliminary study. There was one. Let's see if we need to insert one. Let me take this comment. Thank you. Thank you very much for the good comment. We may insert it. About changes in SSB, these are some in line with some of our other standards, that if SSB is subject to change, then what are the requirements? So this section about changes in SSB is in line with the other standards, so I don't want to go in detail for that. Change in fatwa, again, a very important aspect. So if there is a fatwa getting changed during the tenure of the ICF issuance or the life cycle of the ICF issuance, these are some of the requirements that should be followed. About change of fatwa, as I mentioned earlier, that standard number 29, Sharia standard number 29, and the upcoming governance standard on Sharia decision making should also be considered. Some of the requirements are there. So what are the conditions when there can be a change of fatwa and what needs to be done are contained in this section. It is also more or less in line with our earlier standards, and it refers to standard 29 and the upcoming exposure draft on Sharia decision making. External Sharia audit is not a mandatory requirement. However, we have put in as external Sharia audit as a requirement where in the cases where the SSB considers an external Sharia audit to be necessary considering the Sharia non-compliance risk. So SSB has to say that it is a requirement. The ICF issuance is determined by operator after due diligence to have even higher risks, high investment risk factor in its operations or a relatively large size of investment, and the ICF issuance is ongoing and or period open-ended in nature. So if the Sharia board says that and the size of the ICF issuance is high and the nature of the ICF issuance is ongoing and or open-ended, in those situations a Sharia audit should be performed. The next section actually addresses about the Sharia audit requirements, which should be done in line with our auditing standard number 6, section Sharia audit. Other requirements contained here are in line with our other standards like Sukuk standard, and it refers to the auditing standard number 6. So I am not going for detail for that. The next section addresses considerations on change in ICF issuance before intended maturity. That if the ICF issuance is terminated beforehand, before time, or if there is a restructuring or rescheduling of the ICF issuance, what are the requirements that need to be addressed? These requirements also are in line with our earlier standards. Particularly, these are very close to the requirements contained in our Sukuk governance standard. So these are not going to happen in all situations, but wherever they apply, they should be subject to these requirements. We have another comment here. Yarkazan Akil Bekova. Can Sharia compliant products be issued on regular crowdfunding platforms, or the platform must specialize only on Sharia products in order to run an ICF? It's a very good point. Actually, I touched upon this thing very briefly earlier. The point is that we believe that even if an operator want to do, again, the issue is not platform. The first issue is operator. Second issue is platform. So the point is subject to requirements of this standard. So we have requirements for operator and we have requirements for platform. So whatever are the requirements of the standard, these need to be fulfilled. So the operator as well as the platform have to be compliant with the requirements of this standard. This is in a nutshell. So with that, I believe that we are not insisting that there should be only full-fledged Islamic financial institution running the Islamic crowdfunding. Rather, it can be any operator or platform. Only they need to develop capacity, they need to fulfill requirements, they need to have Sharia board, they need to understand Sharia principles and rules, they need to follow the governance, transparency, and other requirements contained in this standard, then they can do it. So these are the conditions as per this standard. Thank you very much for this question. We have another question from Brother Sadaqat Khan again. Can issuer also contribute and add its funds with investor funds? Brother Sadaqat Khan, sir, it's a very good question, but I believe it may impact the independence. But as of now, we have not addressed this here. So can it create a conflict of interest or not? Or would it be like, reducing the conflict of interest, or can enhance the, like, for example, if the operator always invests 5% of his own money in every Islamic crowdfunding. So what happens that it can enhance the public confidence that the operator is investing its own money as well. So, but on the other hand, it can be a conflict of interest situation as well. But it's a very good comment. I believe we need to take it to the working group and the governance board, and let's see how they address this issue. Again, next question again from Samir Reda, who is responsible about make sure that source of fund given by investor is halal, provider or issuer, and how it can do its validation. Thank you very much. I have gone through that section very quickly. It was about the operator's responsibility for user assessment and operator's responsibility for investor due diligence. Some of the requirements are in the main standard and some of the requirements in the KYC, etc., in the appendix as well. So considering those requirements, I believe that operator is responsible to do that, but at the same time, all of the responsibility has to be done with some of the criterias and some of the classifications that need to be done. For that purpose, the operator is responsible but cannot be guaranteeing that. This is the issue. Guarantee cannot be there. So when you use the term make sure, yes, it needs to be done, but making sure is a stronger word, to be honest, although it's their responsibility, but making sure is not easy. So we discussed about restructuring and termination, which is, as I mentioned, in line with our other standards. Then coming to consideration that maturity and liquidation of the ICF issuance. So then we have put some requirements on the issuer and the trustee to ensure that the contract is settled or liquidated in line with the Sharia requirements and the contractual requirements. And the Sharia board has to fulfill its responsibility at this stage and to review the final reports and issue its own final SSB report on the ICF issuance, that this transaction has culminated properly. Next section is about transparency and disclosure. The most important part is with regard to the prospectus, which contains maximum of the information. So we have put some overall requirements with regard to transparency and disclosure. We have referred to IFSB standard number 19 also, which need to consider the requirements of this standard, which need to be considered in line with in addition to the requirements of this standard. Overall considerations for transparency and disclosure, some of the aspects we have discussed earlier. Existence of a clear communication channel has to be there, and the financial and non-financial reporting needs to be passed on. Means that the adequate reporting at all stages is one of the core requirements of this standard. About the prospectus, it should be developed in line with that the investment risks and the investment requirements and the informed decision making requirements are done properly. Prospectus should be considered a live document if it is open document, and that means that it should be updated on a periodic basis. But if it is not an open-ended transaction, then it is only one-time thing. Only if it is open-ended and it's an ongoing transaction, an open-ended transaction, only then it should be updated on a periodic basis. And an ongoing transaction which is not open-ended also does not require a prospectus to be updated on a periodic basis. What are the requirements for the prospectus? Brief about the issuer, etc. About the owners, information structure, and the auditors and the Sharia auditors, audit and governance committee members, feasibility study, market analysis, valuation reports, etc. Profit distribution and loss sharing mechanism, etc. Potential risk and their mitigation factors, applicable legal framework, details of recourse to Sharia compliant credit enhancement arrangements, like for example, if there is any guarantee, undertaking, etc. Whether or not it is transferable or not, and if it is transferable, the unit is transferable, at what condition it is transferable, details of Sharia compliant option attached, and mechanism of final settlement, and summary of various scenarios that may be applicable to ICF issuance in case of settlement. The prospectus should also cover these things about Sharia compliance and governance, etc. Communication of rights, obligation, risk, and disclaimer is a very important thing that should be disclosed on the website and the portal of the operator all the time. So when you invest in Islamic crowdfunding through an operator, you should be provided all this information with regard to rights, obligation, risk, disclaimer at the operator website very prominently. some of those requirements actually are in line with good regulatory requirements that we have seen around the globe. So this is more or less in line with the good governance requirements and good regulatory requirements with regard to information and transparency. We also have recommended that there can be for the larger ones, there can be rating service, and particularly there can be an internal rating mechanism by the operators to rate different ICF issuances. For particularly relative significant ones, have to go through the rating service. Financial reporting. Now, this is also very important, that normally these are small institutions, small companies, but we believe that Islamic crowdfunding cannot take place without proper financial record keeping and accounting. So the operator has to make sure that there is a proper record keeping system available. If it is like, if it is if the issuer has a proper system, it's nothing like it. But if the issuer doesn't have a proper system, then operator has to make sure about this thing, and the operator shall maintain accounting records, etc., for a reasonable period, at least 7 years, in line with regulatory requirements, but at least 7 years. Then ICF issuance related issuer responsibility include developing financial reporting of the underlying operations separately. So if the underlying operation are the whole of the issuer business, then it's okay, the overall financial reporting is sufficient. But if it is not sufficient, like, for example, if the issuer has taken financial reporting for a part of the business or the new aspects of the business and not whole of the business, in that situation, proper financial reporting should be done in line with FAS 14, FAS 34, and the conceptual framework of AAOIFI. Accounting policies adopted by issuer in this respect shall be approved by the SSB, because at times they may have a Sharia issue with regard to accounting and reporting. And at the time of conclusion of a transaction, there should be proper financial reporting, and there should be very proper financial reporting and a final SSB report, etc. With regard to termination, if anything is pending with regard to lawsuits or anything, like, as a contingency, even at the time of termination, that should be identified, and where practicable, the requirements of IFSB standard number 19 should be covered. We have put in additional requirement with regard to the financial reports of the ICF issuance. So these are to be audited on an annual basis. The auditor for financial report of ICF issuance shall be appointed by the issuer in line with relevant regulatory requirements in consultation with the operator. The auditors of the financial statement of the issuer shall be eligible for such appointment unless disallowed by relevant regulatory requirements. So the financial reports of any ICF issuance which is continuing must be prepared and circulated. If it is the same, like if the issuer has full business as the underlying operation, in that situation, the full version of the financial statement can be used. But if it is not the situation like this, then it has to be like the financial report of the underlying operation, which shall be subject to separate audit. Scope of audit will be as per AAOIFI auditing standards in line with international standards on auditing, and the report shall be made available to everybody, all stakeholders. Now, performance and compliance reporting. So depending on the nature of the transaction, we have put in requirement with regard to operational and performance reports, including internal reports, to be shared, and compliance reports to be prepared for the purpose of ensuring transparency and disclosure. If there are any changes with regard to the transaction structure, the issuer, the underlying operation, etc., in all those situations, the communication of changes needs to be done. Then we have identified the list of key changes which should be subject to the communication requirements. So if there are any changes in any of these matters, this must be disclosed. Significant considerations also include the individual notification to the users, and excessive information that may be counterproductive. So important information needs to be shared by the operator and the issuer. Like sending too many messages on a daily basis might undermine the significance of important messages. So it should be done on a frequent interval, and it should be done on significant matters on a periodic basis. There are some additional requirements here as to how things should be done. These are with regard to the, with regard to the disclosures, that they should be properly understandable. So there are some requirements with regard to that in paragraph 133. 134 actually talks about the user education and awareness with regard to as to how they can be educated with regard to these things. And with that, we come to the effective date of which will be 1st January 2023 if we approve within this year. We have held today first public hearing on that, and we are planning 2-3 more public hearings before we take it back to the board. In between, we request all of you to provide your comments in writing. So with that, we complete a quick review of our standard. It is a long standard. Some of the things we discussed in quite detail, and I know that I had to quickly skip through some of the details, for which again I will request all of you to provide your comments in writing as soon as possible. With that, I cannot see any other comment now. So if we have any other comments on this standard, otherwise we can conclude for. Yeah, Brother Iswan, you're saying?
There's a hand raised by Brother Sadaqat.
Brother Sadaqat, please.
So you can unmute yourself. Yes, we can.
Yeah, yeah. Okay, can you hear me?
Yeah, we can hear you, sir.
Okay. Brother, regarding profit distribution mechanism, that shall be mentioned in the prospectus, perhaps. So any mechanism being suggested by AAOIFI for the distribution of net profit and or sharing net losses between the issuer and investor periodically, and payment of principal amount. So,
Brother Sadaqat, sir, I believe that the issue is here that this is a principle based standard. So all transactions are not the same. All ICF transactions may be different in structure. Some may be based on, again, all of them do not have a profit and loss sharing mechanism. Some of them maybe leasing, some of them might be donation. So we kept the option that if it applies, now if it applies, then there are AAOIFI Sharia standards and accounting standards that actually address those issues. So we believe that there is no need to go into detail here because it's a principle based standard. So it depends on what the real structure of the transaction is, and it will be based on that.
Mudarba distribution shall
again, we don't know that as of now, we are developing standard on an overall basis. So you don't even know there will be transactions on Mudarba basis. Yes, we believe there can be some, but we don't need to go for that in this standard at least. And for the Sharia standards, we already have a few things in place. Our accounting standards are already in place. So they provide the core guidance already.
Right. Brother Umar, we thank you very much for your highly professional presentation. Besides responding our question with patience, coolly, very coolly. Secondly, may Allah subhanahu wa ta'ala rewards you and your all others team members who have contributed in developing this highly important standard. And also I pray to Allah subhanahu wa ta'ala to strengthen your throat and further enhance your speaking power so we can benefit from that. Thank you very much, Mr.
Thank you very much, sir. Your presence is always, a pleasure for us, and your guidance and your comments are always valuable. Thank you again. I think now we will take a break of around 20 minutes, Brother Rizwan. It is 12:10 in Bahrain, I think. So we take a
We're scheduled to finish at 1:30. So
I think we should take a break for namaz salat for prayer.
Yeah, only for prayers,
Yes.
etc. We are taking a break. So it is 12:07 Bahrain time. So we join back at 12:25 Bahrain time. Okay. So 12:25 Bahrain time, nearly 18-20 minutes, we'll take a break. Okay.
Okay, inshallah, we'll join that.
Okay.
this on.
Thank you, everybody. See you in 20 minutes, around 20 minutes. Assalamu alaikum. Assalamu alaikum. Brother Rizwan, shall we start now?
Yes, I think we should. Bismillah.
Bismillahirrahmanirrahim. Assalamu alaikum. Welcome everybody back again. And those who have joined only for this session, welcome everybody. This exposure draft that we are going to discuss now is our exposure draft of governance standard on syndicated financing. Syndicated financing or consortium financing, both are the common names, and this is one of the common phenomena of Islamic finance, quite common in almost all markets of Islamic finance. AAOIFI Sharia board had in past issued a Sharia standard on syndicated financing already, which covers the Sharia aspects mainly with regard to the Islamic finance transactions, and which take place between multiple institutions, and as one single, or as one, like, consortium, or as a group of financiers. It may include at times conventional institutions as well, and this is the situation where more Sharia related risks actually arise because of the involvement of more than one type of institutions, more than one type of structures, more than one type of securities, underlying assets, etc. So things become more complex there, particularly in these situations. So we believe that the Sharia standard covers some of them, most of the important aspects from Sharia side, and also some of the governance aspects as well. But we believe that this is still one of the areas where Islamic finance needs to improve its practices. There are situations where a lot of market participants have felt that there are needs for improvement in this area, and that was the reason that AAOIFI decided to develop a standard on that area. So with that, I will share my screen. This is a very recently issued exposure draft. Islamic crowdfunding standard was issued several months back, nearly mid of 2021. But this has been issued just in the last week of 2021. And so maybe a lot of you might not have even seen this one. In developing this standard, we actually have gone through different aspects of consortium financing, and we had to build upon what was written already in the Sharia standard. And we had to consider some of the aspects with regard to the documentation of these transactions as well. And a lot of you are already aware that, alhamdulillah, in the last several years, we are working together with other Islamic finance infrastructure institutions as well to collaborate with each other, like IFSB, IFM. So even in this standard, IFM was invited to provide their comments, and we believe that some part related to documentation is primarily their domain. So we do not want to go in that domain part. Rather, we have actually kept ourselves limited mainly to the governance part of it, which is primarily AAOIFI domain. So with that, I would like to quickly touch upon one important aspect that I believe is from where we actually brought in here. We brought in this standard. We believe that the biggest issue, again, Sharia issues, the hybrid transaction issues, all these issues are there, but we believe that the biggest issue is the transparency, fairness, and conflict of interest. Means that while Islamic financial institutions are commercial institutions, they compete with each other as well. But syndicated financing is an area where they come together and work together to achieve the combined goal. And even in those areas, it has been identified that a lot of times there are transparency issues, there are conflict of interest issues, and there are sort of fairness issues. And that is actually one of the reasons that we felt that this standard is necessary. And it's not only the Sharia part, as I mentioned, The Sharia part is also important. We have seen a lot of instances of Sharia governance related issues where the Sharia compliance is compromised or is at risk. But for me, the most important reason for this was, like, ensuring that whenever Islamic financial institutions work together, or even they work with the conventional institutions to achieve Islamic finance transaction, they should be more fair, more transparent, and should be avoiding any type of conflict of interest. So with that, I'm not going to read what is written actually in preface section and the introduction section. Rather, I'll take you through the take you to the objective clause first. I can see there are two questions in QA tab. Let me see. We have first comment from Sharmin Akhtar. In respect to BC 17 on customer responsibility, my company is arranger conventional in nature. The customer is conventional as well. Want to approach AAOIFI to participate in syndicated finance for a project, let's say power plant project, which is Sharia compliant. Can AAOIFI participate in this? What are the Islamic financial instruments can be used to raise the fund, as different instruments have different regulatory standards to be followed under AOFI? Very good question, but can you allow me to take this question and the second question coming from you? Very good questions, but if you allow me, I'll take these questions towards a bit either towards middle of the standard or towards the end of the standard, because maybe it will be too much jumping the gun if we decide to answer these questions now. So thank you very much for the good questions. And thank you for your patience for allowing me a little bit time to answer them in due course. Coming to the objective of the standard is to set out a framework for governance for the governance of syndicated financing transactions over the entire life cycle of such transactions in line with the best governance practices in Sharia governance. Sister Alia, can you make a note here? I'm not sure whether it's a typo error here in this PDF version only, in this PPT version only, or the PDF version only, because it is supposed to be written in line with the best practices of governance and Sharia governance.
Inshallah.
So can you just make a note of it?
Yes, sure.
Implementation of such framework in turn is expected to result in enhanced stakeholders' confidence in IFIs and Islamic financial markets, particularly with regard to the compliance with Sharia principles and rules, ensuring transparency and fair and equitable treatment of the stakeholders. This standard complements and shall be read in conjunction with the AAOIFI Sharia Standard 24 syndicated financing. The standard scope. The standard sets out the governance framework for overall life cycle of the syndicated financing transactions comprising deal origination, award of mandate, marketing and placement, financial close till deal termination, whether early or as per the original maturity phases. The responsibility to implement this standard rests with those charged with governance and the management of the lead arranger, significant syndicate participants, and the IFI's customers in their respective capacities. The guidance provided in this standard, particularly in respect of pre-mandate phase, also known as the deal origination phase, and financial close phase, shall also be applicable mutatis mutandis on listed and unlisted sukuk issuances, insofar as the same is not in conflict with GAS 12 sukuk governance. So just to clarify, it is not going to replace any requirements of sukuk governance standard, but pre-mandate phase, some of the requirements are there which are not there in the sukuk standard, which are similar in nature. So that was the decision of the board to recommend that these are the additional requirements which should be followed for sukuk governance as well. So it actually, from that perspective, this standard actually enhances more and strengthens more on the sukuk standard, which is issued by AAOIFI already. Okay, before I go to definitions, let me take other questions. We have one question by brother Nurbek Kanjabayev. Your question is divided in two parts, so let me try to handle them one by one, because in between there is another question. So initial review of the draft standard, why there is need to limit syndicated financing to IFIs only. Most of the lead banks in this type of transaction will be commercial banks due to size and reach. So the quick answer is AOIFI's mandate is Islamic finance. AOIFI's mandate does not include conventional. Even the conventional financial institutions who have Islamic finance window become Islamic finance financial institution according to the definition of AOIFI. So technically, full IFIs and window IFIs, that is the conventional bank windows who are technically IFIs from AOIFI perspective, they are our main subject. If a transaction is done by purely a commercial bank or a consortium of commercial banks called as Islamic bank, actually that is not acceptable from our perspective. Actually, we have recently discussed this issue in the Windows financial accounting standards as well, which is a revision of our standard number 18, financial accounting standard number 18. So we do not, as AOIFI, we do not promote conventional institutions doing Islamic transactions unless they do it through a dedicated Islamic finance window. So this is the approach. So from that perspective, some of the requirements are here to distinguish the conventional and Islamic part, which is necessary because it happens that it takes place in the real life transactions. Other than that, we do not want to go into any area which is not primarily the ambit of Islamic finance, but rather is the ambit of conventional finance. Just in a minute. Brother Nurbek, your second question is about requirement of SSB for syndicated financing should be reviewed again as it will create disadvantages for the customer. Brother, first thing, we do not want to bring any risk with regard to Sharia. That is our first issue. So from the perspective of having a Sharia board reviewing the syndicated financing transaction is necessary. However, we did not put a separate Sharia board requirement. So it is not a requirement that customer need to appoint a Sharia board. There is no requirement in this standard like this. Rather, the requirement is that each IFI's Sharia board will review it. However, the lead arranger will just facilitate through its Sharia board through an initial fatwa. So technically speaking, there is no extra burden. And this is what actually happens, that each Islamic financial institution Sharia board anyway reviews the syndicated financing transactions. So from that perspective, we believe that your issue is addressed. Irrespective of my answer, we will take your comment to the board and we'll see if they want to take it further for any further change. Thank you, brother. Okay, we have a question from brother Hidayatullah Beg. I have two questions. The first one is, in certain syndication transaction, there is only one financing facility, that Islamic finance facility. The participants are both IFIs and CFIs. Such transactions are more prevalent in the GCC, where the project funding requirements are huge and the customer prefer Islamic financing, but the funding requirement cannot be met by IFIs alone. In such transactions, there is commingling of funds from both the FIs and CFIs. What is AOIFI's view on such transaction? How will Sharia compliance be ensured? Brother Hidayatullah Beg, very good question, but I think I partially answered in my earlier question already and earlier response to earlier question already. Let me clarify. If the conventional comes through our Islamic window, if the conventional has an Islamic window and comes through the window, we consider it to be compliant. This is done. Second, if it comes through its own money, it can take two forms. One, it directly does an Islamic finance transaction, which is not preferred by AOIFI. As I mentioned, FAS 18 also doesn't consider FAS 18 revision, the new one, also actually mentioned that address this issue. And actually, AOIFI and IFSP are coming shortly with a exposure draft on Sharia governance framework, which will have a chapter on Windows also, and that also does not allow that. Now, third situation, like within this one, the second situation and overall third situation is that it becomes a sukuk. So the conventional puts money in the sukuk, not as a part of the funding. So what happens that this happens that conventional money and Islamic money both are coming. The structure is Islamic. The customer wants Islamic. Now, in order to ensure that conventional money can also be taken, the transaction structure is converted into a sukuk. By converting into sukuk, it converts from a syndicated financing to a sukuk transaction. And in sukuk, we do not have a condition as of now that a conventional bank cannot invest in sukuk. AAOIFI does not have this condition as of now, neither from Sharia side nor from governance side. So technically speaking, if it happens like this, it is okay. So the only condition which is not accepted by AAOIFI is that conventional comes without a window or not through its window and invests directly in the syndicated financing. In this situation, it has to be two different transaction branches. Both cannot be Islamic. It has to be Islamic versus conventional separately in line with this standard. So thank you very much for a good question. I hope that the issue is clarified. The second question, not all IFIs have agency function capabilities to take the role of Islamic facility agent, security agent, etc. In most hybrid syndicated financing transactions, the IFI appoint a CFI as facility security agent. What is AAOIFI's view on such appointments? How will Sharia compliance be ensured? Jazakallah khair. Brother, I think we addressed this issue the way that we said that there has to be a lead arranger for the Islamic side to ensure Sharia compliance. But we did not say that security agent, etc., all have to be separate. So the transaction has to be separate. I think what you are calling facility agent, if you are talking about facility agent as lead arranger or the arranger, then yes, we are asking that Islamic and conventional have to be separate. On a lighter note, if Islamic finance does not have these capabilities, they should not be doing banking business. So they need to develop these capacities. It's not the issue of not having capacity. It's the issue is that they are not strong enough to take the lead. We are putting a clear requirement that if it is a conventional Islamic hybrid tranche, in that situation, Islamic, even if the conventional is taking a lead, the Islamic part should have its own lead so that the Islamic lead can be handled by, handling the requirement to this standard. Now the definitions, the arranger. Arranger, also referred to as manager in certain jurisdiction, is one or more CFI, IFIs individually or collectively mandated by the customer of a syndicated financing transaction to arrange finance by way of forming a syndicate of eligible IFIs and or CFIs. An arranger, unless specifically mentioned otherwise, includes a lead arranger. See paragraph 7H. So there are some requirements about that. We'll go to that. Customer in the specific context of this standard is the person availing a financing facility under Sharia compliant mode of financing by way of a syndicated financing transaction. Fatwa is the common definition. We have just carried it from other standards. Hybrid syndicated financing transaction in the specific context of this standard is a syndicated financing transaction which includes a Sharia compliant tranche as well as a conventional financing tranche. Information memorandum, also referred to as placement memorandum, is a disclosure document that describes and presents for the potential syndication participants a financing proposal along with the prospective customers' organizational, operational, or financial information to facilitate evaluation of such proposal for the purpose of participation as a syndication participant. Interfinancier agreement, also at times referred to as syndication agreement or syndication in terms of reference, is an agreement amongst the financiers, syndication participants, including IFIs and CFIs, or classes of syndication participants, describing inter alia their respective rights and responsibilities with respect to a syndicated financing transaction, the customer and the underlying asset and or business, and the respective securities. The details as to how the transaction shall be executed, how the payments from the customer are to be received and be apportioned among the syndication participants. Islamic financial institution is the common definition. Lead arranger is an important definition again. is an IFI CFI mandated by a customer of a syndicated financing transaction from among the mandated arrangers to lead the process of arranging a syndicated financing transaction. At times, the responsibility of the lead arranger may be shared by more than one co-arranger as per defined terms of reference in the mandate. And those who are expert, they understand that actually, technically, there is only one. It's more about sharing the fee. Mandate, by whatever name called, is usually the first document to be agreed on a syndicated financing transaction, which initiates the syndication process, sets out the proposed terms of syndicated financing, and authorizes the arranger to arrange the syndicated financing transaction. Provisional fatwa, in the special context of this standard, is an initial fatwa issued by lead arranger Sharia Supervisory Board to approve the basic structure of the Sharia the syndicated financing transaction that would help the documentation team draft the relevant syndicated financing transaction documents and facilitate other IFIs SSB to have an understanding of the transaction structure. I believe, my brother, your question is clarified now. Sharia principles and rules is the standard definition that we follow in all of our standards. Sharia compliance is the standard definition that we follow. Syndicated financing, also referred to as consortium financing in just certain jurisdictions, refers to a group of IFIs. Now, this is an important part to understand here, that this standard is applicable on IFIs only. So from our perspective, when we are using the term, we are referring only to the Sharia compliant part of the IFIs. So refers to a group of IFIs jointly financing through any Sharia compliant mode of financing. Syndicated financing underlying assets are the tangible assets, usufruct and services, and or ownership of assets of particular projects or special investment activities underlying a syndicated financing transaction. Security agent, also at times referred as the fiduciary or trustee, is an entity appointed by the syndication participant or by the lead arranger on their behalf to serve as an agent to hold and or enforce rights on the syndicated financing underlying assets or securities on behalf of the syndication participants and to safeguard their interest in accordance with the specific term of reference. Let me just clarify to your question, brother, that I believe that our standard as of now do not insist on security agent to be an Islamic financial institution, because function of security agent is primarily a service. It can be done by conventional also. We did not put a prohibition on that. Syndication participants, also at times referred to as syndicate financiers, include the IFIs or the CFIs agreeing to participate in a syndicated financing transaction. Those charged with governance in line with International Ethics Standard Board. This is again the standard definition that we use from IESPA, and which applies on the institution according to the nature of the institution. Okay, so let me take more questions here. Brother Nurbek again has another question. In large syndicated transaction, facility agent role will be taken over by conventional banks, as local IFIs may not have such capability. Facility agent is required if the syndication includes other banks other than IFIs. We suggest that the Sharia board should provide a provision where IFIs cannot take facility agency role. Key requirement should be whether banks participating in syndication is to follow what they agreed contractually. Brother Nurbek, we are willing to take your comment to the board, but let me clarify for the benefit of the audience that the board has been thinking other way around. The board believes that because Islamic financial institutions are smaller, so even if the customer wants Islamic, still the major institutions are taking the role. And that Islamic finance is at a disadvantage. So the board feels that providing good governance practices is to ensure that IFIs will have better capability, better facilitation, better capacity to handle these things. So technically speaking, the role should be in the hand of Islamic financial institution with regard to the Islamic finance branch. Let me mention the other part as well. We need to understand that the biggest number of non-compliances and compromises on Sharia that we have noted and which were discussed by the working group members and the board members during the discussion on the standard were mainly because the conventional institutions were taking the lead and they had nothing to do with Islamic. They were concerned with the with the profit only, the interest only. So the problem was that they were trying to impose their terms and conditions. They tried to impose their legal documentation. They tried to impose their structures, and they actually at times do not actually adhere to the requirements of Sharia compliance. So the result is that on one hand, the Sharia compliance is jeopardized and the risk of Sharia compliance non-compliance increases. And on the other hand, the Islamic banks and Islamic financial institutions get into a less privileged position. So whatever has been written by the board in this standard as of now is not that they did not know that what is happening in the market. What you are saying is happening in the market, even not only in small jurisdictions, it is happening even in the larger jurisdictions, and it is happening in some of the biggest markets. Like in UAE, in Malaysia, at times you will find that even the conventional institutions, particularly in UAE market, Saudi market, you will say multinational institutions are actually taking the lead most of the time. The point is that we believe Islamic is different. We believe Islamic has its own requirements. If we believe that Islamic needs to be given due priority, and we believe that at times Islamic banks are less privileged, so we need to put in requirements like that. So we will take your comment, no doubt about it. I'm just clarifying what was the thought process for writing down these things in line with the decisions of the working group and the board. We have another comment from Brother Umair Nihal Siddiqui. Can IFIs become a lead arranger for a transaction where conventional bank is also the participant and the IFI becomes security agent on behalf of conventional bank? We clearly said that we need to distinguish the two branches, and Islamic has to take part in their part only. Okay, let me now take the questions from Sharmin Akhtar also. In regard to VC 17 on customer responsibility, my company is arranger conventional in nature. The customer is conventional as well. Want to approach IFIs to participate in syndicate financing for a project. Let's take a power plant project which is Sharia compliant. Can IFI participate in this? What are the Islamic financial instruments can be used to raise the fund, as different instruments have different regulatory standards to follow under, if to be followed under AAOIFI? So the quick answer is what are the requirements of this standard? The IFI part, if it is syndication financing, the IFI part has to be separate and segregated. For that purpose, IFIs have to take the lead. A conventional Islamic finance window is technically considered an IFI for that purpose, so that is acceptable. But if it is not the case, then IFI, then according to this standard, once it is implemented, the conventional should not take a lead, and IFI has to take their part. Now, IFIs can participate in that according to different structures. So the product will be dependent on the nature of the transaction structure and the cash flow model. So we cannot comment on that right now. Coming to the other point, which I discussed in an earlier question also, that this can take form of a sukuk as well, where the whole overall structure takes form of sukuk, and the conventional put their money and Islamic put their money, both put their money on the sukuk. Technically speaking, there are more than one options that can be used as Islamic financial instruments, so we cannot have one single answer here. Most common for power plants would be ijara or diminishing musharaka with shirkatul milk. Second question, based on practice of pricing between customer and arranger are as follows: agency fee, fixed amount, signing fee, and work fee, fixed amount. And arrangement amount X percentage of the total fundraise, which is uncertain as we don't know how much it will be able to raise. Is this fee structure Sharia compliant? The answer is, quick answer is yes, if all the Sharia conditions are met. Yes, Sharia allows to have fixed plus variable success-based fee. So the quick answer is yes, it is allowed, but there are terms and conditions that need to be fulfilled. Okay, so now we are coming to part A, key pillars and principles. We like what we saw in the earlier Islamic crowdfunding standard. We have our key pillars, and the key pillars are the same. And then we have identified the key principles which are applicable on these type of transactions. Effective Sharia compliance mechanism. I'm not going to details. I'm just going to summarize the principles. Fair treatment of and among stakeholders. Equitable and fair treatment of among syndicate and syndication participants, transparent interaction of and among syndication participants, effective oversight, transparency and mutual disclosures, code of conduct and ethics. So these are the core principles, summarized core principles which are applicable on these transactions. Brother Sadaqat Khan, I have just received 2 comments from you. The first one, I believe it's related to the earlier one. And I think I answered that live already. Yeah. Syndication product structure is always developed by Sharia board based on the project. Yeah, that's a short, quick comment to respond to the earlier comment. Thank you very much, sir. So now, what are the parties to syndicated financing transaction? The lead arranger, it can be even more than one, the arrangers, the security agent, the syndication participants, and the customer. Parties, all the parties of syndicated financing transaction shall be responsible at each respective phase of a syndicated financing transaction for compliance with the requirements of this standard in their respective areas of responsibility. Just let me mention a discussion point here where you can provide your comments in writing later as well, particularly those who are attending from the regulator side, if they can provide their comment on this part. One of the parties is the customer, and we have put some responsibilities on the customer also. There was a discussion between the working group members and the board members with regard to as to whether a governance standard which is applicable primarily on Islamic financial institutions can put some responsibility on the customer or not. Considering this thing as having significance with regard to the way standard presents, we have made some amendments to the wording, making it more acceptable from that perspective. But still, it is very important as to whether a governance standard can put some requirements on the customer. Our argument was that yes, it can put and it should put. Even on the Sharia standard side, there are some requirements which cannot be addressed unless the customer comply with the Sharia part. So similarly, on the governance part, it is not possible unless the customer agrees to comply with the governance part. Considering this, we believe that this needs to be done on an overall basis in which every party, including the customer, has to fulfill their responsibilities. The life cycle of syndicated finance transaction is slightly different from sukuk, etc., like awarding of mandate and marketing and negotiation, transaction close, continuity of the transaction, changes in the transaction before intended maturity, and maturity of the transaction. The standard is structured in a manner like we just saw before this one. We saw the Islamic crowdfunding standard, that the structure of the transaction, the whole standard is based on the stages, and the responsibilities of different parties at each of the stages is identified. Now, awarding of mandate. So what are the main requirements of the awarding of mandate? So the first and foremost is about transparency and disclosure. We have put in some responsibilities with regard to transparency and disclosure at the time of awarding of mandate and respective negotiations, where the potential lead arranger, who is an IFI, and other arrangers and the potential customer shall exchange all current, relevant and accurate information and or details about the customer, financial position, underlying assets, proposed syndicated financing transaction structure, etc. The potential customer shall also, through experience of now this is an important point, that potential customer shall make it public, preferably make it public, the expression of interest, to disclose in a transparent manner that what are the proposed terms of syndicated financing, etc. This is to ensure that maximum level of transparency is there. The mandate of a syndicated financing transaction at a minimum shall document the initiation of the syndication process, set out the proposed terms, document the customer's commitment to ensure compliance with Sharia principles and rules, authorize the arranger to arrange the syndicated financing transaction. The lead arranger shall procure the lead arranger. Sister Alia, if you can just note at the end of D, there should be a full stop. I don't know whether it's a typo error because it was confusing me whether it's continuing this paragraph or not. I think it's ending, but there should be a full stop. Maybe there is a typo error here. If you can just note down. I'm not sure whether it's in the standard or on the presentation only. Maybe only in the presentation, but actually it confused me. Now the next point is about the SSB provisional fatwa. So we are saying that once the transaction is initiated, the work is initiated, the original transaction structure should first be subject to a provisional fatwa, and it is a common practice. We have seen a lot of times it is done that the lead arranger shall ask the Sharia board to provide a provisional fatwa to approve the basic structure. This actually facilitates other Sharia boards in actually approving it, and the initial work becomes easier because of that. So this is a requirement, but this is not the final fatwa, and the final fatwa for each of the bank has to be issued by the respective Sharia board. Conflict of interest is the other important consideration here. So for that purpose, it is identified that conflict of interest should be avoided, which may arise because of an existing or a prior customer relationship of a potential arranger with the potential customer or its associated entities. An existing financial or non-financial exposure of a potential arranger with the potential customer or its associated entities. A fee arrangement between a potential arranger and potential customer on terms and conditions different from the market norms. So these are the situations where there is a risk that the arranger and the lead arranger or the arranger and the customer may have a relationship which may be conflict of interest and which may impact other participants of the syndication. A conflict of interest situation may result in jeopardizing the interest of either the potential customer or one or more of the potential syndication participants. In order to avoid such situation, the negotiation process shall be transparent. Potential arranger shall disclose any possible conflict of interest to all parties. Potential arranger should not accept a mandate to be an arranger if it is probable that such mandate, if so awarded, shall result in jeopardizing the interest of a party or parties to the syndicated financing transaction. So this is the ethical way of doing business. This is the right way of doing business, transparent and ethical way of doing business, that conflict of interest should be avoided by the institutions. Maintaining Sharia compliance in a hybrid syndicated financing transaction. Now, if it is the hybrid situation, again, some of the requirements with regard to hybrid situation are already contained in our Sharia standard. However, with regard to syndicated financing transaction, which actually takes place on a hybrid basis, we are putting some conditions. It should happen only when the customer's financing needs cannot be met by IFIs alone, or by IFIs willing to become syndication participants alone, and hence require the inclusion of CFIs. Or if the customer has no specific preference for Sharia compliant transaction, has already awarded the mandate to a CFI as arranger, and the customer and the arrangers are willing to include IFIs and syndication participant by having separate tranche of Sharia compliant financing to be approved by respective SSPs. So this situation is more or less answering the question that was there in the question answer box that I responded earlier, that the customer is also conventional, CFIs are also conventional, Islamic, but additional fund is needed for which Islamic can come in. So for that purpose, there has to be a separate tranche according to a requirement of this standard, and that it has to be approved by respective SSPs. And the requirements of this standard and the standard Sharia standard 24 will still be applicable. In this situation, the sanctity of Sharia compliance tranche shall be maintained under all circumstances and at all time. The arranger for the Sharia compliance tranche shall be clearly identified and shall be only an IFI. This is a very clear point that we want IFIs to take this one. We don't believe to be honest, we don't believe, or as a good governance practice, an institution that does not believe in Islamic finance takes control of Islamic finance. So again, a conventional financial institution that has our dedicated Islamic finance window, that dedicated window is considered to be an Islamic financial institution, so that can take a lead. But if a conventional financial institution that does not operate as an Islamic financial institution and does not have a proper Islamic finance window wants to take lead in this one, we believe that the principles of governance, principles of Sharia compliance, principles of transparency and conflict of interest, they all may be jeopardized, and the requirements of this standard may not be fulfilled, and the requirements of Sharia Standard 24 may not be fulfilled. And so a separate mandate to the Islamic finance crunch is necessary. That is the requirement of 21C. Coming to Part D, transparency and disclosure. Part D is about during marketing and negotiation. Again, during marketing and negotiation, there are a lot of issues. So first thing is about transparency and disclosure, for which there has to be an information memorandum. And the information memorandum shall be in line with best market practices and regulatory requirements and shared with all potential syndication participants on a timely basis, means that they should be provided enough time to review that. Information memorandum shall include information about the customer, name and information about the customer's board, etc., board management, etc., and the auditors, a detailed feasibility study and market analysis, etc., detailed description of the transaction, its pricing and valuation of assets, where applicable, the phases of syndicated finance transaction, etc., and total period, and details of profit and loss mechanism as applicable, details of arrangement fee, etc., which are applicable, which are payable to the arrangers and other parties, detail of security agent along with rights and responsibilities, the potential risk and strategies to hedge instruments to hedge them as applicable to the customer, the syndicated finance transaction and the underlying assets, credit and other risk assessments, name and profiles of parties providing services related to that, like arrangers, guarantees, assurance, and the takaful providers, and details of mechanism for final settlement and early settlement, etc. Details of recourse to Sharia compliant credit enhancement arrangement like guarantees, undertakings, etc. in case of default. Sharia compliant options attached for conversion, etc. Legal framework, legal jurisdiction, which is applicable, the Sharia principles and rules which are applicable, summary of scenarios that may be applicable in case of early settlement, restructuring, scheduling, etc. So these are some of the important requirements that we believe must be there in the information memorandum, because it's a very important document for ensuring transparency and discipline. The second part is interfinancer agreement. So that was the information memorandum, but the second part is interfinancer agreement that lead arranger shall prepare in consultation with all potential syndication participants and interfinancer agreement in line with the requirements of the standard. We believe that AAOIFI will be developing a standard document structure of interfinancer agreement in the times to come. However, what are the minimum requirements of that interfinancer agreement as per governance requirements we have put in this standard. So we have not put a standard format, rather we have put in the minimum requirement. So the details of syndicated financing transaction, etc., detail of respective rights and responsibilities of parties, details of arrangers and lead arrangers, their rights, responsibilities, limitations, security agent and its rights and responsibilities, significant detail and process with regard to security, holding the security and title, etc. And some of these things might be answering some of the questions that we received in the beginning, that all these requirements are to be put in writing in the interfinancer agreement. So even the Islamic and the conventional part, if it is there, then those all have to be segregated. Summary of the structure and the significant terms and conditions of syndicated finance transaction, along with the summary term sheet, conditions and process for pre-exit. Now, this is an important point, that if there are multiple financiers in the syndication participation, they need to agree if pre-exit is allowed or not allowed, and if pre-exit is allowed, because it can create conflict of interest situations. So if pre-exit is allowed, what will be the conditions for pre-exit and how it will be done and how it will be managed. Terms and conditions to ensure equitable treatment between the participants and rights and responsibilities of parties in case of early settlement, etc. Protocols of sharing information, etc., in line with requirements of the standard, condition and process of transfer of shares of syndicated participation transactions, between the participants. So if one of the participant is going out and the other one is taking a share, what will be the conditions and process and dispute resolution mechanism to be applied between them. So these are the requirements of the interfinancier agreement. So first we have put requirements for the information memorandum. Second is the interfinancier agreement. Now interfinancier agreement, in case of a hybrid syndicated financing transaction, we have put in a requirement. It should clearly identify and segregate the Sharia compliant tranche from the conventional tranche, and it should be the lead arranger for the Sharia part should be identified separately, who will be responsible to ensure compliance with the requirements of this standard. And the interfinancier agreement shall also ensure, that's an important point, that in case of hybrid, it shall also ensure proper enforceability of Sharia principles and rules and the independence and equitable status of rights and position of Sharia compliant participants. This is again one of the concerns that we have seen, that at times these things are jeopardized because the conventional is mainly taking the lead. So at times Sharia principles and rules and at times the status of rights of the Sharia compliant syndication participants is jeopardized. For example, Sharia compliant transaction is ijara, which is not a security, it is ownership of asset, while conventional is a conventional lease, which is for which there is the security of asset. So the security of asset versus ownership of asset may have different sides and positions. So what happens in case of default? These sort of things need to be clarified very clearly in the interfinancier agreement and eventually in the transaction documentation. Again, conflict of interest situations may arise at this marketing and negotiation phase. So the pricing need to be transparent, and conflict of interest situation should be avoided. Customers' pricing preferences should be documented and communicated to the arrangers very clearly. And it should be communicated to all the participants. With regard to the customer's preference with regard to potential syndication participants, if the customer says that I want these banks in and I don't want these banks on a priority basis, then it should also be documented, or any other preferences with regard to these things should be properly documented and communicated. Things need to be transparent and avoiding conflict of interest. The next part, party considerations during transaction close. The term transaction close, again, this is one of the questions. Some of the people feel that industry understands the term transaction close very well, but some of the board members and working group members thought that we should try to find a better term. Some industry participants use the term financial close, some use the transaction close. So we would welcome any good comments with regard to a term that can define this phase better. I can see a comment in the Q&A tab. Again, Brother Nurbek, in relation to para 20 part C, you have mentioned that in a scenario where CFIs and customer want to include IFIs, arranger for Sharia compliant tranche must be IFI, and there should be a separate arrangement agreement between customer and IFIs as arranger. In practice, when the mandate is awarded to CFI, can this mandate include Sharia compliant tranche rather than requiring separate arrangement between customer and IFI for Sharia compliant tranches? Commercial terms will be the same other than a structural change in relation to Sharia compliant syndication. Brother Nurbek, thank you very much again for your kind comment. I think that we will take your comment to the working group and the board, and we'll see what they think of. Let me summarize what I understand based on their discussion. They believe that the conventional part and Islamic part need to be segregated. Number one, they are not exactly the same. They are different. Number one. Number two, the risk of compromise on Sharia happens when the conventional bank is in the lead. So we do not want to have that risk of continuing the risk of Sharia non-compliance. The third part is, at times the rights of Islamic are jeopardized. That is important. Fourth part is about legal documentation, lot of legal documentation because of the lead arrangement taking the hold of legal documentation. So a lot of Sharia principles are compromised actually because of the inadequate legal documentation. These are the real life issues identified by the working group members and the board members during discussions on this draft standard. So we believe that it has been brought after long discussion, and it is one of the principal recommendations of the standard that the Islamic branch must have a separate arranger. But for sure, I'm just clarifying what has been discussed. But my responsibility is to take your comment, and we'll take your comment to the board. Next comment we have can a CFI be a arranger of an Islamic syndication or sukuk arranger in a market that has small Islamic finance market but appointing a third party Sharia advisor to ensure Sharia compliance? The question is, again, this will depend on whether the conventional institution has a window or not, because Islamic, as AOIFI, we are not encouraging any conventional institution to do Islamic transactions without creating a window. This is our first stance as AOIFI. We believe that conventional Islamic finance have considerable differences. It's not only the name change, it's not only the documentation change, it is actually a change of system, a change of transaction structure, and it even needs a change of mindset. So from that perspective, we have not allowed in this standard to for this thing to happen like this. However, as I mentioned, we will take your comment and we will see how it can happen and how it can take place in the real life example. So for the real life example, for smaller markets where these sort of issues can be there, we can consider what sort of flexibility can be provided. So we will take it to the board, but I do not commit anything, because the overall approach of the board, not only for this standard, but for recent summer standards, is very clear that we want Islamic finance to be more distinguished and more clearly identifiable from the convention. On the transparency and disclosure side, the lead arranger should consult and keep the customer informed about all major developments, etc. These may include, in particular, the allocation of financing among the syndication participants, allocation percentages, or if there is a conflict of interest that needs to be identified, the basis of allocation among the participants, particularly where the possible total participation surpasses the mandated amount, how the quota is allocated, and the details and basis of the underwriting, if it is done by the customer, by the lead arranger itself, or by any other AAOIFI, if it is done. Transparency and disclosure related requirements continue here. The lead arranger should fully apprise the customer of the agreed terms of the syndicated finance transaction, related legal and contractual obligations, as well as the relevant requirements of the Sharia principles and rules. The customer shall be allowed reasonable time and opportunity to evaluate the legal contracts to be executed and their potential impact. The arranger and other syndication participants shall preferably disclose any prior or existing business relationship and relevant experience with the customer. Similarly, a syndication participant, including an arranger with access to customer-related information that may have an adverse impact on the financing decision of other participants, shall share such information with other syndication participants in accordance with the relevant laws and regulations. These are some of the most important requirements that we felt we need to brought in the standard, because these are the areas where our worthy members of the working group and the board were feeling that there are loopholes in the industry practices. If there is any additional, the consortium financing should not be linked with additional type of services and financing. This is very important, that it should not be leveraged on the mandated financing. So it should not happen, okay, arrange syndicated financing for me and I'll give you this business. So it should not be linked together. Rather, it should be this can create a conflict of interest, so it should be avoided. Similarly, the lead arranger should also ensure that any associated appointment, like for example, security agent, takaful, or anything, is on a arm's length basis. An arranger may be more influenced to close a syndicated finance transaction due to fee income potential. So a common participant may be less interested in closing the deal immediately, but the lead arranger or an arranger, because of the fee potential, may be more willing to close the deal as soon as possible. So there can be conflict of interest situation between the two type of participants. The arranger trying to push the deal as soon as possible, and the other participant may not be given enough time to review it. Another very important thing is that if one of the potential syndication participant who is approached by by the leader or the arranger or the arrangers shall not approach the customer directly to offer a counter proposal. Okay, why you are going to this or a standalone deal? So why you are going with this? Let me do the deal for you alone, or let me do the deal for you on the better terms for you. So this becomes actually a unethical practice, and it creates a conflict of interest. And it may include some information which is shared with the customer, because with the information memorandum or with the financial agreement, some information may be shared. So that may create a conflict of interest situation. So these all also need to be avoided. We have another comment here, 31. Under this, instead of transaction close, can we say transaction completed or funding participation completed? Funding participation completed is a good term, brother Siddhartha. Thank you very much. We will take both of these terms to the board, and we'll see how they see it. Thank you very much for very nice contribution, sir. Now, continuation during the consideration during the continuity of the transaction. The customer shall provide regular progress and performance updates and periodical financial statements, etc. So there should be a common, the common communication mechanism, ensuring that all that transparency is there and all disclosures, but particularly the financial disclosures, are made on time. Syndication participants, according to the pre-agreed information sharing protocol, shall keep each other updated on any material information that comes to their knowledge. So for example, one of them knows something that is important for all of them. So as a part of information sharing protocol, as part of interfinancing agreement, they should share with it. And particularly if one of them is changing, making a significant change in respect in exposure with the customer, either significantly reducing the customer or increasing the customer, they should disclose it. Sharia compliance and governance respective responsibilities. So each one of them will be responsible for ensuring Sharia principles and rules compliance, and this will include that they need to apply their own, their Sharia board will review it, their internal Sharia audit, external Sharia audit, depending on whether it is selected in sample or not, whatever are the requirements. So they will all be included, including these transactions in their structure. One of the possibilities was that, like Sukuk, we make a separate Sharia board, we make a separate Sharia audit, etc. for syndicated financing. But with the decision of the working group and the board was that it will be too much cumbersome for the syndicated financing, and rather the way it is happening in the market, that the banks have their own, like, documentation review by a Sharia board, and internal audit, inter Sharia audit and external Sharia audit are covering it as a part of their normal responsibilities. So it is decided that they will be doing it as per their normal practices. Mutual sharing of issues, observation, and knowledge. This is one important issue, which is an additional requirement according to this standard, is that if one of the banks identify, one of the IFIs identify some Sharia-related issues or that relate to its syndicated financing transaction, they should inform the lead arranger, and through lead arranger, they should consult the customer and then share with all syndication participants, because it's a matter of Sharia compliance. So if one of them noted that Sharia compliance is jeopardized, then it means that it may be jeopardized for all of them. So it means that it needs to be immediately communicated to the lead arranger, and then there has to be a communication mechanism. The customer should also be consulted, and the issue tried to be resolved on a priority basis. Change of fatwa, as I may discussed in Islamic crowdfunding standard as well, these requirements are more or less same coming from the Sukuk standard. So, and this should be in line with the Sharia standard number 29 and our upcoming standard on Sharia decision making. So the change of fatwa should be considering all those requirements from Sharia and governance perspective. Early settlement of syndicated financing transaction, like our earlier standard on Sukuk and like what we discussed in Islamic crowdfunding, there are some important aspects which need to be done. So normally early settlement should not take place unless one of these conditions is met, and if it happens, again, as we have discussed about the compliance with Sharia principles and rules, as well as about the syndication participants' communication, mutual communication is important, and the fair treatment of the parties to the syndicated financing transaction is the utmost important thing. Pre-exit by a syndication participant, this is an important clause which we inserted. A syndication participant may pre-exit from the syndicate finance and transition before its maturity as per the terms and conditions of the interfinancer agreement, duly complying with the contractual terms of the syndicated financing transaction and the relevant Sharia principles and rules. So again, it has to be according to the mutual terms and conditions that are agreed, and it should not be happening on the cost of others, and it has to be happening on a transparent basis. The syndication participant intending a pre-exit shall ensure compliance with interfinancer agreement, and such requirements of interfinancer agreement may include informing the customer and other parties, etc., for a pre-exit and replacement with an existing syndication participant or a new incoming participant. So it can be early settlement directly with the customer by early payment. It can be transferred to another syndication participant, or it can be a new financer coming in, taking share from this syndication participant who is going out. So in all those situations, there has to be a proper communication, and then we have to see what is written in the interfinancer agreement. We have to see what is written in the interfinancer agreement, and we need to make sure that that the requirements with regard to the conflict of interest in that situation are complied with. And the information to other syndication participant is the minimum requirement that anyway should take place. NOC need to be taken from other syndication participants if so required by the interfinancer agreement, and signing a non-disclosure agreement, because if you are exiting, you have access to some of the privileged information about that transaction, about the customer and the transaction, and about other syndication participant, etc. So in that situation, a non-disclosure agreement may need to be signed. Again, all these requirements will be subject to the interfinancer agreement which is there. These are the recommended requirements as per the standard, but it will actually depend on what is actually written in the standard. About restructuring and rescheduling of the transaction, more or less the requirements will be more or less similar to what we have written in our Sukuk standard and Islamic crowdfunding standard that we have gone through earlier. Now coming to maturity part. Again, at the maturity part, we need to make sure that the Sharia compliance is there. So all the SSBs of respective syndication participants have to actually supervise the process of liquidation, etc. And syndication participants and the security agent, etc., in their responsibilities have to make sure that the transaction maturity takes place in line with Sharia principles and rules, as well as the relevant contracts. With this, we would like to we can conclude this standard. The effective date which is recommended is 1 July 2023. Again, we plan to finalize this standard within this year, and it may become applicable immediately after becoming applicable. So it does not need too much time for preparation, because it will be applicable on a prospective basis, means that transactions executed on or after. So since there is no change in the existing structure, so it may not need too much time for preparation. However, this is the recommended time that we have. So lately, I think we haven't received any comments. So if there are any comments on the remaining sections or that I have tried to go through very quickly, I'll be more than happy to take those questions. We are right on time, but we can take few minutes, few questions in next few minutes, inshallah.
Brother Umar, there is a question in the chat. We request everyone to put their questions in the Q&A tab, please. But I'll read out the question. It says, it's by Brother Nurul Kabir. Could you please?
Okay, I can see the question now in the chat window. Brother Nurul Kabir, Assalamu alaikum. Could you please explain about Sharia permissibility of charging early settlement fee from the finance receiver client? Brother, normally in Islamic finance, we do not have an early settlement fee. Rather, what happens that it depends on the nature of the transaction. So for example, in Murabaha, ideally, the total amount of Murabaha receivable is receivable. So it doesn't work as a fee, rather it works as a discount if necessary. So it works other way around. In case of Ijara, it is sale of asset. So actually whatever is called conventionally as an early settlement fee becomes a price increase in the sale of asset. So it will depend on the nature of asset and nature of transaction. So there can be no one single answer to your question. However, I have given you two examples of Muraba and Ijara, but in Musharka, it can change the settlement value also of the assets with when you settle the assets. So there are options like this. So if we don't have any other questions.
There's a question and there is also a hand raised. So question is in the Q&A tab.
Question where? Not in QA tab. Okay, now in QA tab. Okay. Will there be any changes expected to AAOIFI Sharia standard on syndication with then governance standard comes into force? Brother Nurbek, we believe that this standard is complementing the Sharia standard, not replacing any of its requirements. So we do not expect any immediate change in that.
There's a hand raised as well, Brother Umar.
Okay, so we can take that, Brother Sadaqat. Okay.
No, not anymore.
Okay.
Not anymore.
Okay, so I think Brother Rizwan, now you can conclude then, I think, because time is already over. Thank you, everybody, for patient listening and for very valuable and nice comments. And we again request you all to send your comments in writing. Please take some time to read these standards and send comments in writing. It will be highly appreciated. Thank you again. And now back to you, Brother Rizwan.
Thank you very much, dear Brother Umar. I think this has been a marathon task to complete the exposure draft for 2 standards in 4 hours. Mashallah, I think it has been a great interactive session. And I think such sessions are mutually beneficial helps us in including the right comments, as well as also for the stakeholders in understanding the perspectives of from where AAOIFI is coming from. So Jazakumullah khair. I would like to thank all of you. We had about 500 registrations for this seminar today and the event. And as I said, I mean, this will be the first event or first public hearing on for both standards. But definitely there will be at least 3 to 4 sessions, in different time zones, looking at making sure that we can tap into different stakeholders from different parts of the world. There might be some public hearing just in Arabic as well, still to be decided. The next public hearing on these 2 important standards will be on the 16th of February. And this will be primarily focused for the Gulf Cooperation Council or the GCC region. That we will be putting together in collaboration with Bahrain Association of Banks, as well as with the Oman Banking Association and others. So I would encourage you to attend them as well. But in the meantime, if you have any comments, feedback, please feel free to send us an email on governance@aoifi.com or info@aoifi.com or pr@aoifi.com. All these emails work and we receive your comments and feedback. Please also, I would also highly recommend and request you to take your time, go through the document, and also share the documents with your colleagues and circles of influence. I think this will be very helpful for them. As I said, it's a mutually beneficial arrangement that we are proposing here. It's a knowledge sharing as well as an advocacy and awareness program from AAOIFI's perspective, as well as to generate feedback and comments on these important documents. A lot of hard work goes into putting together these documents, so all the way starting from the board to the working group to the secretariat. So we would really appreciate your time in going through the documents, sharing your comments and feedback. And huge appreciation to the secretariat team as well, the sisters who've put together a lot of hard work in making sure that the final document is presented and well led by the Secretary General himself. So we, on behalf of AAOIFI, its secretariat, would like to thank you very much for being with us today. And inshallah, we hope to see you, at a number of other future public hearings. Please feel free to share these events and invitations with your friends, with your colleagues, in your relevant networks, so they can benefit from these opportunities as well. It's our opportunity to engage with our stakeholders like yourselves. So let us continue these virtual engagements as well, and inshallah we hope to see you sometime in physical sense as well, in physical manner, once we are once the travel restrictions are eased. So with that, let me from AAOIFI, let me thank you all for being with us. Jazakumullah khair. We look after yourselves, stay safe, and fi man Allah. Assalamu alaikum wa rahmatullah.